Sir, very happy morning to all. My dear lovable students, in this slot, we are going to solve computation of total income. There are selected 7 questions are there. We are going to solve the selected 7 question one by one. I will be solving illustration number 2. Then you have to pause for 10 minutes. You just go through the adjustment of that question and mark what are all the adjustments are important. If possible, do or complete that question number 1 before you come to question number 2. So our target is 1 by 7. Out of 7 questions, we are going to solve the first question, my dear lovable students. From the following information provided by Mr. Suresh, aged 43 years. Always when you are reading the question, please mark the age to determine whether that guy is a normal person, senior citizen or super senior citizen. And wholesale dealer for the assessment year 25-26, you are required to compute the tax payable by him. Without computing the total income, we can't compute the tax payable. That means first we are supposed to compute the what income? Total income. For that only trading P&L account of Mr. Suresh has been given in the question. My dear lovable students, always if P&L account is given, the game is very easy. Because the starting point is we have to start with the net profit. This net profit will be having impurities. What are the impurities will be having? You just check the credit side of the P&L account. By dividend from Indian company gross. Sir, dividend from Indian company is an income to be taxable under the head IFRS. So this should not be credited to the P&L account. Because of crediting 17,20,000 to the P&L account, credit side of the P&L account increases. Because of that, net profit increases. Should not increase. Deduct from the PGBP and include under the head IFRS. Easy game always. By interest received on FD, yes, if we put an FD, bank will give us interest. Net of TDS, FD made on 1/8/2024, 1,17,000. So my dear lovable students, if 100 rupees is the interest, 10 rupees bank would have deducted as TDS. Because under section 194A, that is interest, other than interest on securities, 10% is the TDS to be deducted. So balance 90 rupees we would have received. So this 1,17,000 will be 90%. Since only 90% has been credited to the PGBP, we have to deduct 90% from PGBP. Whereas when we are including the same income under the head IFRS, we have to include at 100%. That adjustment you should, sir, remember in your brain. By rent received, yes, super. It's an IFHP, income from house property income. It has been credited to P&L account. Because of that, net profit would have been increased. Should not increase. Should be deducted from PGBP and should be included in the head IFHP. By income tax refund, 13,000. My dear lovable students, there are 2 components for income tax refund will be there. One is principal and other is interest. Sir, principal means it's a reimbursement. I have paid some extra tax, government is giving me back. For that, no need to pay again tax. Whereas, my dear lovable students, interest means income on income. That is the first time I am getting an income. That income should be taxable under the head IFRS. That's, I have scrutinized the credit side of the P&L account. Coming to the debit side, opening stock is business related, purchases is business related, direct expense is business related, freight inwards is business related, salaries and wages, general expenses, rates and tax, interest paid on late filing of GST. Very important point will be tested in exam. You are paying an interest. There are 2 things are there. One is interest is there, penalty is there. Penalty is infraction of law, whereas interest is compensatory in nature. For example, I am liable to make a statutory due on 10th of the next month, but I have not paid within 10th. I am paying on 12th. Is there any delay for 2 days? For that delay, I am liable to pay interest. That is compensatory in nature, that can be debited to P&L account. Because it is not infraction of law. Whereas penalties are infraction of law, If that debited to P&L account should be enna back. Income tax paid, my dear lovable students, we are going to calculate how much is the tax payable. Income tax is not a allowable expenditure, should not be debited to P&L account, should be enna back, added back. Interest paid to NBFC, I have to check that, sir, whether they have really paid or not, because interest is an expense, deduction on actual payment basis. The depreciation has been debited to P&L account. Generally, depreciation will be debited based upon the book calculation, but we have to provide the depreciation as per the income tax calculation. Are you all really with me? Following additional information is provided by him. From here, the real game starts. Closing stock of the previous year 24-25. Don't confuse that. Previous year means last year. Previous year means in tax, our previous year 24-25 was undervalued by 55,000. This is called as stock adjustment, my dear lovable students. Stock adjustment in the sense means here the closing stock is undervalued. If closing stock has been correctly valued, the gross profit would have increased. If gross profit increases, net profit would have increased, my dear lovable students. That means that 55,000 rupees should be directly added to the what profit? Net profit. That is what we are supposed to do. Because this closing stock is undervalued. That means, my dear lovable students, if we have correctly valued the closing stock, credit side of the trading account would have increased. If credit side increases, gross profit increases. If gross profit increases, automatically net profit will increase. That's why we have to add to the net profit. Rates and taxes. Yes, in the P&L account, we are having rates and taxes that has been debited to P&L account. Rupees 1,000 paid towards late filing of his income tax return for the assessment year 24-25. We all know about the belated return 139.4. If you are not filing the return within 139 subsection 1 time limit, such a return are called as belated return. If you are filing belated return, then you are liable to pay a fees under 234F of the Income Tax Act based upon the total income. If the total income is up to 5 lakh 1,000 rupees, more than 5 lakh 5,000 rupees is a provision. My dear lovable students, this 1,000 rupees has been paid under 234F and it is included in the rates and taxes. That 1,000 rupees should be added back because that is not compensatory in nature. Only interest is compensatory in nature. Penalty, fees and all should be added back because it is for infraction of law. Salaries include 30,000 paid on a single day by way of cash to his accountant. We all know that in a single day to a single person, you should not make the cash in excess of 10,000 for normal people, 35,000 for GTA. So question simply checking that whether you know or aware of 40A subsection 3 or not. Cash payment exceeding 10,000 or 35,000 as the case may be. Interest paid on loan of rupees 10 lakh taken from an NBFC, non-banking financial company. Out of the loan taken, 2 lakh was used for personal purpose and balance was used for business purpose. No TDS was deducted while paying the interest on loan. A beautiful adjustment has been tested. Because, my dear lovable students, interest paid on loan of rupees 10 lakh. How much is the total interest paid to NBFC? 1,15,000. Sir, in order to allow that interest, that loan should be used for the purpose of business or profession. What they are saying is totally they have taken a loan of 10 lakh. And my dear lovable students, out of that 10 lakh should be bifurcated into two categories. 2 lakh was used for personal purpose. And the balance was used for business purpose. Balance was used for, that means 8 lakh has been used for business purpose. No TDS was deducted while paying the interest on loan. Generally, sir, we are having two sections. Section 193, interest on securities. And section 194A, interest other than interest on securities. My dear lovable students, if you are making interest to a bank. Bank will not hide income. Will the bank hide income? No, because they are under the guidelines of RBI. They are using core banking solution. If you deduct TDS on the interest payment to bank, their working capital will get affected. Whose working capital? Bank's working capital. So, what government is saying that if you are paying interest to the bank, for the bank, it's a cash flow from operating activity. If you deduct TDS, sir, the cash flow will come down. Don't deduct TDS. It's an exception covered under 194A. This point you keep in mind. An amount of rupees 35,000 was paid by check during the year towards health insurance policy covering himself, his spouse and children. As we all know that, sir, 80D is equal to SST. Self, spouse, dependent children. My dear lovable students, this guy's age is 43 years. That means normal person only. That means in set number 1, he can claim 25,000 rupees as deduction under 80D. General expense include. That means in the profit and loss account, we are having general expenses. Look at here, man. 3,65,000 rupees is the general expense. That 3,65,000 include advertisement expense of 25,000 paid by check towards an advertisement in souvenir published by a local political party. My dear lovable students, that is not a business expenditure. That should not be debited to what account? Should be in a back. And that can be claimed as a deduction under section 37 subsection 2B. It should be added back. And it can be claimed as a chapter 6A deduction under 80 GGB or 80 GGC, as the case may be. In this case, the assessee is not a company. Assessee is other than company and individual. So he can claim a deduction under 80 GGC. Like that you should not think, because it's a local political party. Only to a registered political party, it will be allowed as a deduction. Income tax refund include 2,500 towards interest. That interest will be taxable under IFOS. Depreciation charged as per income tax rules is 2,20,000. That means the depreciation debited to P&L account will be as per the books of accounts. Should be in a back. And this 2,20,000 can be reduced. Advance tax paid during the year is 9 lakh. After you calculate the tax payable, reduce the advance tax, remaining tax payable you will get. TDS has been deducted on interest received on FD. 10% TDS would have deducted under section 194A. Turnover for the year 31/3/2024 was 2.58 crores. That means hijacker benefit will not be available, because in the immediately preceding previous year, in case of an individual or HUF, if the turnover does not exceed 1 crore in case of business or 50 lakhs in case of profession, no need to deduct TDS under 194H, 194I, 194J, 194A, 194C and 194. Beautiful question, man. Like this, a 15-mark question will be tested in exam. Try to, sir, always when a question comes like this will come in exam, first write the master table. Computation of total income of Mr. Suresh. Number 1, income from salary. Is there any details regarding salary? Still write and put a dash. Number 2, income from house property. What is the adjustment regarding house property you should do? You have to remove it from the PGBP and you have to include in the head IFHP. First of all, in PGBP, rent received has been given. Rent received means let out property. Rent received means let out property. That means gross annual value will be fair rent or municipal value, whichever is higher. Whichever is higher or standard rent, whichever is lower, the answer is called as expected rent. Expected rent or actual rent received or receivable, whichever is higher. That much information and all not given in the, that is why rent received has been taken as annual value due to the absence of information relating to expected rent in the question. Why I am reading this? Don't write GAV as 7,20,000 simply. You write the rules for calculating GAV, then the examiner will impress, because anyway we will know that point. For what purpose we are knowing? To exhibit to the examiner only. So properly disclose it to the examiner. Less deduction under section 24A. 30% of net annual value. Sir, 7,20,000 upon 30%, you will get 2,16,000. So the taxable income from house property will be 5,04,000. Very easy hit to handle, and you can get 1 or 2 marks there. You have to just remove it from the PGBP and calculate the income from house property. Coming to the profits and gains of business or profession, the real hero of any total income question, man, how to start with it? Computation of PGBP. Always we have to start with the net profit as per P&L account. That is a starting point. But that net profit will be containing so many impurities. And this has to be mandatorily written in exam. Don't straight away, sir, add it back. This carries 1 mark. Expenses or payment debited to P&L. That means these items and all debited to P&L, but not allowed. But it is not allowed. So it has to be in the back, added back. Number 1, depreciation as per books of accounts. As per books, 1,82,000 is the depreciation. Generally, as per books, depreciation would have calculated as per straight line method. But as per Income Tax Act, the recognized method is WDV method. So when you are adding back that depreciation, immediately you reduce, sir, depreciation as per income tax rules, 2,20,000. Then you will not forget in exam. At least you mark a space that depreciation in the less column. Fees for late fee of income tax return for assessment year 24-25. That's what I have already clarified. 234F is not interest. 234F is fees. Fees is for infraction of law. You have not filed the return within 139 subsection 1 time limit. You are filing the return belatedly. For late filing of return, you are liable to pay a fees under 234F. That has been debited to what account? P&L account. Is it a business expenditure? Sir, if I pay the salary, then only I can conduct the business. Sir, filing return of income is the procedural aspect of income tax. In income tax, there is a default. For that, you have paid 1,000 rupees. If that has been debited to P&L, how it can be allowed as a reduction under PGBP? Should be in the back, added back. The same thing, salary paid, rent paid, printing and stationery, traveling, the expense relating to business can be debited to P&L account. But this is anyayam, sir. This is your inefficiency to file the return of income on time. That has not been done by you. Because of that, 1,000 rupees has been debited to P&L account. Should be in the back, added back. Next one. Salary to an account and in cash exceeding 10,000. Straight application of the provision. Disallowed under 40A subsection 3. This 30,000 should be in the back, added back. Because as per 40A3, in a single day to a single person, you are not supposed to make cash payment in excess of 10,000. More or less in every PGBP question, this one adjustment will be there. 40A subsection 3, that will give you 1 mark in exam. Interest paid to NBFC. My dear lovable students, whether you pay interest to NBFC or banking company, if the loan amount has been utilized for personal purpose, on that, how interest can be debited to P&L account? Am I right? On which, sir, is used for personal purpose. In question, if you see, 1,15,000 is the total interest paid for a total loan amount of 10 lakh. Out of that 10 lakh, 2 lakh rupees is the amount which has been used for personal purpose. So, proportionate interest they are calculating. What interest, man? Proportionate interest. How to calculate? 1,15,000 divided by 10 lakh into 2 lakh comes to 23,000. Should be added back. Should be added back. Because this much amount of loan has been used for personal purpose. The next one, beautiful point of this question. In the entire question, I love this point. Interest paid to NBFC, on which tax is not deducted. Attract disallowance under, disallowance at the rate of 30%. You have to check whether the interest has been paid to banking company or NBFC. If it is to a bank, then 194A is saying that you are not liable to deduct TDS. Even if no TDS has been deducted, disallowance provisions will not be applicable. Whereas if you are making payment to an NBFC, mandatorily TDS has to be deducted under section 194A. Under section 40A subsection 1A, since Mr. Suresh turnover for the immediately preceding previous year 23-24 exceeds how much crore? 1 crore, he is required to deduct TDS. That means hijacker benefit will not be available. Sir, in the immediately preceding previous year, my turnover does not exceed 1 crore in case of business or 50 lakhs in case of profession. In the current year, under 194H, 194I, 194J, 194A, 194C, 194R, you are not liable to deduct TDS. Question specifically highlighting that in the immediately preceding previous year, this guy's turnover exceeds 1 crore. Super fantastic, sir. So you have to specifically check in exam whether the interest has been paid to a banking company or NBFC. NBFC means TDS is mandatory. Disallowance at 30% of the interest is attracted for non-deduction of TDS. That means what is the total interest? 1,15,000. Out of that, 23,000 has to be fully added back because that interest is attributable to personal purpose. So 1,15,000 minus 23,000, 90. On that, 30% should be added back, comes to 27,600. Why 30%? Because NBFC is a resident. If the recipient is a non-resident, 100% TDS would have been added back. Sir, income tax is not an allowable expenditure, should not be debited to P&L account. If it has been debited to P&L account, should be added back. Interest paid on late fees of GST. Interest means it is compensatory in nature. It is not infraction of law. For example, my dear lovable students, sir, I have to make the GST payment on or before 20th. GSTR 1 is there, GSTR 3B is there, IFF is there, like that. So many things are there in GST returns basically. Sir, instead of filing that return on 20th, sir, I have filed the return on 22nd or 23rd. So there is a delay of 2 or 3 days. For that delay, I am paying what? Interest. So till that 2 or 3 days, that money will be used for the purpose of business or profession only. So interest is compensatory in nature. It is not for infraction of law. Hence, it will not be added back. So we are having a great lesson from this question. If interest debited to P&L account should not be added back. Fees, penalty, sir, any other payments should be added back. Basically, the litmus test is very simple. You have to check whether it is for compensatory in nature or infraction of law. Infraction of law should be added back and compensatory in nature should be allowed as a deduction. Advertisement expense, 2 words, an advertisement in a souvenir published by political party. First of all, as a businessman, contributing to a political party is not a business expenditure. So it should not be debited to P&L account. So as per 37 subsection 2B, it should be added back. First you have to add back. And there is a specific standalone adjustment which has not directly affected the P&L is the undervaluation of the what stock? Closing stock. Already I have explained the logic. This should be added back. You will be getting subtotal of this much amount. Less income chargeable under other heads of income. Not chargeable to tax, but credited to what account? P&L account. That means certain incomes are there which has to be taxed under other heads of income. Or my dear lovable students, it may not be taxable at all, but it has been unnecessarily credited to P&L account. It's an impurity to P&L account, like dividend from Indian company, interest on FD, rent received and income tax refund. All has to be eliminated from PGBP. You will be getting the taxable PGBP as 52 lakh. 54,415. That's what the updated answer, man. 52 lakh, 54,415. Are you very comfortable with PGBP? Super fantastic to the core. Coming to capital gain in this question, there is no capital gain details has been given. Super fantastic to the core. We are very comfortable with house property and PGBP. There are certain income we have excluded from PGBP that has to be shown under IFRS, it's a straight inclusions only, but TDS implication alone, you have to take care. Dividend from Indian company, 17,20,000. Always the dividend will be taxable under the head. IFRS. Interest on FD, my dear lovable students, only 90 rupees we would have received. That 90 only would have credited to the P&L account. Balance, sir, 10 would have deducted as TDS. But when you are including the income, you have to do the grossing up procedure. What up? Grossing up. Gross income, that's what gross total income. Salary, house property, PGBP, capital gain, and IFRS. So 1,17,000 divided by 90% comes to 1,30,000. So there is a TDS deduction of 13,000 that you have to note, because this amount has to be reduced after you calculated the tax payable. Are you all really with me? Interest on income tax refund, total amount credited to P&L. We have eliminated is how much? Sir, 13,000. But this 13,000 include both principal and interest. Only the interest will be taxable, 2,500. So you will be getting, sir, income from other sources of 18,52,500. I hope that even this is also very, very comfortable to you. Done, man. Gross total income completed. Sir, they want to calculate the what payable? Tax payable. They have not mentioned whether to calculate on optional tax regime or default tax regime. That means we have to calculate in both the tax regime. Always first to do optional tax regime. Sir, then only I can claim the chapter 6A deduction. Can we? Less chapter 6A deduction. In question, two things are there. 80D is there. 80 GGC is there. 80 GGC cannot be claimed as a deduction because it is to a local political party. If you don't read the question properly, this point will be swaha. Local political party. Sir, in order to attract you, they will say that, sir, amount has been paid by check and all. Don't miss the local word. Sir, health insurance premium for self, spouse and dependent children, set number 1, will be allowed as deduction up to. So if the assessee is traveling through the optional tax regime, assessee is entitled to claim a chapter 6A of 25,000, then the taxable income will be 75,85,915. 915 should be round off to 75,85,920, because the last number is 5 or above, will be round off to nearest 10. Am I right? Now I have to calculate the tax payable. Since we have done the question as per the optional tax regime, first I will be calculating as per the optional tax regime. What is the scheme of optional tax regime? We already know that there are two types of tax regime are there. Optional tax regime and default tax regime. My dear lovable students, optional tax regime. What is the scheme? You will be having more deduction, sir, with the higher what liability? Tax liability. Because automatically here total income will be less. Because of that, more tax will be levied. That's why less basic exemption limit. Up to 2.5 lakhs nil. Because this guy is a normal person, a resident, age is up to 60. And 2.5 lakhs to 5 lakh, the next is slab at the rate of 5%. That means the gap of 2,50,000 into 5% come to 12,500. The next slab, 5 lakh to 10 lakh, sir, how much percent? 20% comes to 1 lakh. That's it. 20% slab comes to an any income you are earning more than 10 lakh, you are liable to pay tax at the rate of 30%. That means you are having an income of 75 lakhs. So 75 lakh 85,920 minus 10 lakhs comes to, sir, this much value, 65 lakh 85,920 at the rate of 30% will be 19 lakh 75,776. So as per the optional tax regime, the tax payable before surcharge is 20 lakh 88,276. Is the total income exceed 50 lakh? Yes, sir. Is the total income less than 1 crore? Then assessee is liable to pay a surcharge at the rate of 10% on the tax payable. So 20 lakh 88,276 into 10% comes to 2 lakh 8,876 is the surcharge payable. And the income is not merely 1 lakh extra and all to apply the marginal relief. It's not 51 lakhs, it is 75 lakh. So no need to calculate the rebate for the marginal relief and all on both of this. Please add it. 20 lakh 88,276 into 110%. 20 lakh 88,276 into 110% into 4% comes to 91,884 is the health and education cess. My dear lovable students, please add both and apply 4%. Because surcharge is also a tax. Tax on tax. Am I right? So you will be getting total tax liability 23 lakh 88,988. In that already the assessee has paid an advance tax of less tax deducted at source on FD 13,000. You will be getting tax payable of 14 lakh 75,990 as per the what tax regime? Optional tax regime. Now I am going to move into the default tax regime. The same computation. But under default tax regime, chapter 6 deduction is not allowed. So I will be starting with the gross total income. I'll be starting with the gross total income, not the total income, because that total income will be after chapter 6A deduction. Under default tax regime, no chapter 6A is allowed. Less deduction under 10AA. Sir, no deduction under 10AA. Deduction under chapter 6A. No deduction under 10AA and chapter 6A is allowed. Under the default tax regime, there is no concept of 10AA, there is no concept of 35AD, there is no concept of chapter 6A deduction. You will be getting total income as per 115BAC. That will be gross total income as per the optional tax regime. Since the last number is 5, total income as per 115BAC round off. What is the scheme of default tax regime? You will be having less deduction. Then automatically the total income will be higher. Total income will be higher and the tax rate will be lower. That means up to 15 lakh, my dear lovable students, there is no 30% slab. In excess of 15 lakhs only 30% slab will come. Whereas in optional tax regime, up to 10 lakh, sir, beyond 10 lakh itself, 30% slab will come. Are you understanding the logic? Sir, up to 3 lakh, irrespective of the age limit, there is no age limit in the default tax regime. It is nil. 3 lakh to 7 lakh, gap of 4 lakh. Sir, at the rate of 5% come to 20,000. 7 lakh to 10 lakh, again gap of 3 lakh, you will be having 30,000. 10 lakh to 12 lakh at the rate of 15%. And 12 lakh to 15 lakh at the rate of 20%, above 15 lakh. That's what I said. In optional tax regime, above 10 lakh itself, 30%. But in default tax regime, above 15 lakh, sir, 30%. So whatever may be the figure, you will be getting subtotal on that. Even under the what tax regime also, default tax regime also, if the total income exceed 50 lakh up to 1 crore, the assessee is liable to pay a surcharge of, so 19 lakh 73,276 into 10%. On both the figure you have to add health and education cess of 4%. You will get the total tax liability. On that, reduce the advance tax and reduce the TDS under section 194A. You will get the total tax liability. Will be round off to 13 lakh 44,430. Here it is 14 lakh. You tell me which is better. Default tax regime. Because default tax regime, you are having lower tax liability. Am I right? When you are writing the conclusion, one highlight is there. Conclusion. Since tax liability as per 115BAC is lower than the tax liability under the normal provisions of the Act, it is beneficial for Suresh to excise option under 115BAC. That means it's better to travel through the default tax regime. Don't stop your conclusion with that. He has to excise this option on or before the due date of furnishing the return of income. Before filing the return of income itself, you have to say to the government that I wish to travel through the default tax regime. Further, he's having income from what? Business or profession, that is PGBP. If he opted for 115BAC for this year, the said provision will apply for subsequent assessment year as well. That means if an assessee is having PGBP income, and if that assessee chooses Default tax regime, that's it. Next year onwards, you have to travel through the default tax regime. This point should be there in your conclusion, then only you will get full mark in exam. I believe that the first question is a very comfortable question for you, sir. In the edge of our examination, many points will be highlighted and useful to revise, my dear lovable students. Like this 7 questions we will be solving. A very good hand-picked 7 question. I am just asking you to pause at 10 minutes before I enter into question number 2. Just quickly go through the adjustment. Note the important points. What you felt it as, sir, new to you. Oh, sir, I thought that any payment made to bank and NBFC, no need to deduct TDS. Oh, NBFC, it is liable to deduct TDS. That as a learning for me, sir. Sir, that local political party, sir, I got a big hit, sir. Something you would have learned in this question. Inform me what you have learned new in this question. Settle yourself in 10 minutes and come back. We'll be moving into question number 2. Yes, sir. I hope that you have done the revision of illustration number 1 and we are going to continue with illustration number 2. Once we complete this, we will be ending up with 2 by 7 is the target. You are required to compute the total income. Fine. We have to calculate the total income. And the tax liability of Mr. Amar. Fine. So question need us to compute both total income and tax liability. Aged 58 years. That is important. Very important. Very, very important. A resident individual. Mr. Amar is an advocate and furnishes you the receipts and payments account for the financial year 24-25. This is the difference I am making with question number 1 and question number 2. In exam, you may get a P&L based question or receipts and payment based question. If it's a P&L based question, indirect method of preparation of cash flow statement. If it is receipts and payments method, direct method of preparation of cash flow statement. Exactly that's what we are doing in DT also. Come on, man, these are the receipts and payment. This is the receipt side and this is the payment side. So many receipts will be there. Revenue receipts will be there. Capital receipts will be there. Only pick the revenue receipt. In payment side, revenue payment will be there. Capital payment will be there. Only pick the revenue payment. The capital payment, you have to use it for the depreciation purpose. Are you all really with me? Opening bank balance, put it on dustbin because that's not an income, it's an asset. Fees from legal service, already said that this guy is an advocate. So this will be taxable under profits and gains of business or profession. Motor car loan. Sir, loan is not a revenue receipt. It's a capital receipt. So it will not be taxable at all. Sale proceeds of 5,800 listed equity share sold on 31st March 2025. That date is very important for computation of capital gain. Because our financial year is 24-25, we are having a cutoff of 23/7/2024. This is after the cutoff date. So no benefit of indexation. So this is a capital gain related data. My dear lovable students, staff salary bonus to clerk, PGBP income. Other general administration, PGBP. Office rent, PGBP. Life insurance premium, you can claim it as deduction under ATC. Motor car is a capital expenditure. For that, you are entitled to claim depreciation acquired in January by way of NEFT. That means 40A subsection 3 provisions will not be applicable. Since it is on January, that motor car would have been put to use only for less than 180 days. You are entitled to claim only half the rate of depreciation. Books bought by way of account pay check. Books, whether it is annual publication or other than annual publication, the rate of depreciation for books is 40%. In the month of May, June and September, annual publication, my dear lovable students, whether it is annual publication or other than annual publication, 40%. Computer, again 40%. It has been acquired on 1/11/2024. For what use? Paid by way of account pay check. Again, there is no 40A subsection 3 disturbance. So even this computer also should be depreciated at the rate of, but since it has been put to use for less than 180 days, you are entitled to apply 180 days concept. Domestic drawings, it's a capital expenditure. It's a personal withdrawing, nothing to do with the business. Put it on dustbin. Motor car maintenance is a PGBP deduction. You can claim it as a deduction. PPF subscription, you are entitled to claim ATC. Closing cash balance has been given. Put it on dustbin because that is an asset. other information, very important, 10 informations has been given. Listed equity share on which STT was paid. Sir, listed equity shares are super asset. Simply listed equity shares are not super asset. Listed equity shares on which what should be paid? STT should be paid. Then only it will be treated as a super asset. Sir, once an asset has become super asset, provisions of 112A will be applicable. Am I right? Were acquired in April 2016. As we all know that 2018 is the cutoff date for the super asset. This super asset has been acquired before the cutoff date. And the acquisition of the super asset is before cutoff date. And the sale, transfer of the super asset is after cutoff date. Then grandfather effect will be applicable. Grandfather effect means there is no question of benefit of indexation. Proviso 3 is saying that for super asset there is no question of benefit of indexation at all. But the cost of acquisition is the full value of consideration as on date of transfer or fair market value as on date of amendment, whichever is lower. Whichever is lower, or actual cost of acquisition, whichever is higher. That means by this point, they are testing whether you know the grandfather effect or not. My dear lovable students, for rupees 1,21,800. This is the cost of acquisition. The fair market value of such share on 31st January 2018, because I already explained that that is a cutoff date. And on 1st April 2018 was 75 per share and 85 per share respectively. We will be taking only the fair market value as on 31st January 2018. We don't want the fair market value as on 1st April 2018. That is a confusing data given in the question. Put it on debit. Super adjustment from the capital gain. Motor car was used for both official and personal purpose. That means depreciation should be restricted. Expenditure on motor car should be restricted. 1/3 of the motor car is for personal use. That means only 2/3 will be allowed as a deduction. No interest on car loan was paid during the previous year 24-25. We have taken car loan, but no interest has been paid. So we have to check what is a method of accounting the assessee is keeping. Cash system, accrual system. If cash system, no deduction for the interest. Are you all really with me? Mr. Amar purchased a flat in Kanpur for rupees 35 lakh in July 2016. Flat, not a super asset. Cost of which was partly financed by loan from Punjab National Housing Finance Limited of rupees 25 lakhs. By taking loan only, he has purchased the flat. His own savings of 1 lakh and deposit from Repco Bank of rupees 9 lakh. The flat was given to Repco Bank on lease for 10 years at 35,000 per month. Now that flat is a let out property. So we have to calculate the income from house property. Basically the per month rent is 35,000. Following particulars are relevant. Municipal taxes paid by Amar 8,200 per annum. That can be claimed as a deduction. LT bar MT paid by the owner. House insurance will not be allowed as a deduction. That's why we are getting ad hoc deduction of 30%. As per the interest certificate issued by Punjab National Housing Finance Limited for the financial year 24-25, he paid 1,80,000 rupees towards principal that can be claimed as deduction under ATC, and 2,01,500 as interest that can be claimed as deduction under 24B. Are you all really with me? This is not a self-occupied property, so no need to scratch your head. This is a let-out property. Unlimited, you can claim 24B. He earned 1,20,000 in share speculation business and lost 1,80,000 in commodity speculation business. Speculation business loss can be set off only against speculation business income. 1 PGBP adjustment has been given. Amar received a gift of 21,000 each. In examination hall, many students will not be able to see this word each. When they come out only, they will say, Macha, pochida. So each from 4 of his family members, sir, family friends. So 21,000 into 4, which exceeds 50,000. 56 subsection 2 class 10 will happily applicable. Tax it under the head what? IFOS. Because these guys are not relatives. He contributed 1,21,000 to PM Care Fund. Who's PM? Who is PM? Modi ji. 100% reduction to Modi ji. By way of bank draft. That is very important, man. That is very important, man. Are you all really with me? So, entire 1,21,000 can we claim it as deduction under Modi G, sorry, 80G. That's it. He donated to a registered political party. Last question it was local political party. Now this guy is donating to a registered political party. Rupees 3,50,000 by way of check. Can we claim it as deduction under 80 GGC? He follows cash system of accounting. Thank you. That means, my dear lovable students, not accrual system. Whatever has not been paid cannot be claimed as deduction. CII has been given cost inflation index if need for the purpose of computation of the what gain? Capital gain. Sir, only one transfer is there. That transfer also after the cutoff date. Sir, even if it is before cutoff date for super asset, no benefit of indexation. Are you all really with me? Assume Mr. Amar is not willing to opt for provisions of 115 BAC. That means he want to travel through the optional tax regime. Look, after giving 3,50,000 rupees donation and 1,21,000 to PM Care Fund, if he travel through the default tax regime, it will be a great knuckle. Are you all really with me? That's why he happily, sir, he himself said that I just want to travel through the optional tax regime. That means we have to calculate the total income. We have to calculate the, sir, tax payable, always the summary table, income from salary nil. Then income from house property. There was one property. That property is a let out property. Can we calculate the house property income? Gross annual value. What is the monthly rent? You pick from the question. 35,000 for 12 months comes to 4,20,000. Less municipal tax, local tax or municipal tax paid by the owner. 8,200. Anyway, that is for 1 year, I think, right? So the net annual value is 4,11,800. On that, you have to apply 30%. And IOBC has been pakka specifically given in the question, 2,01,500. So your income from house property will be 86,750. That's what income from house property, 86,750. Fairly a simple deal to compute the income from house property in this question. You know one thing, here itself you would have fetched 2 to 3 mark in exam. Don't worry about that 15 mark to be scored. That is practically impossible. Get here and there 2-3 marks and able to score 10 to 12 mark in that computation of total income by spending 25 to 30 minutes of your exam time. You are done with the first question. Are you all really with me? Coming to PGBP, man, you tell me, is this a net profit route or the direct method route? That means whatever direct items are there, you have to take care. First, I am calculating income from profession. My dear lovable students, fees from legal services directly I have to show 49,60,000 rupees as the fees from profession. Less expense allowable as deduction. Staff salary and bonus. It's a directly professional expense. You have to remove it. Other general and administration expense. It's a directly professional expense. You have to remove it. Office rent. It is pakka related to profession. You have to remove it. Sir, motor car maintenance, you should be very careful because as per section 38, asset used for both business and personal, only the percentage attributable to the profession are allowed to be deduction. So out of 72,000, 1/3 is for personal purpose. That means 2/3 is for business purpose. Up to that 2/3, you are entitled to claim it as a deduction. Car loan interest, my dear lovable students, first of all, SSC is following what system? Cash system. No loan has been paid, so no deduction, not allowable. Since Mr. Amar follows cash system of accounting and no interest is paid during the year. Now I am going to calculate the depreciation under section 32, 1 by 1. Motor car. What is the value of motor car? 9,50,000. What is the rate of depreciation for motor car? 15%. Have the motor car put to use for more than 180 days or less than 180 days? So that's why into 50%. Have the motor car fully used for business? No, sir. Only 2/3. That's why into 2/3. Look how many computation. Are you very clear with all? This much will be the depreciation on the motor car. Books being what publication? Annual publication. Sir, whether it is annual publication, other than annual publication, for books it is how much percent? So 80,000 into 40%, 32,000. Computer is also rate is 40%, but it has been put to use for less than into 50%. So you will be settled with the PGBP of 7,24,100. I believe that you are feeling very comfortable with the PGBP also. Coming to the one more additional head, capital gains. First of all, what is the capital asset that you finalize? My dear lovable students, the capital assets are listed equity share. Before that, only profession we done, man. One more from share speculation business is there. That loss we will show it off. Income from share speculation business, 1,20,000. Whereas loss from commodity speculation business, 1,80,000, but we can set off only because, sir, loss from speculation business can be set off only against profit from the speculation. So the remaining, how much rupees? 60,000 to be what forward. So income from share speculation business will be nil, and here 7,24,100 plus nil will be 7,24,100. Here 99.99% of the students. You can put 0.01% also. That means what? 100% of the students will miss one point. That point I will tell you. Is this guy an advocate? Yes, sir. Advocate, law, medicine, accountancy, architecture, interior decorators, technical consultancy, authorized representative, film artist, IT professional, company secretary, engineer or any other notified professional by CBDT. My dear lovable students, if their gross receipts does not exceeds 50 lakh, then they can travel through presumptive taxation route. Look at what is the fees, 49,60,000. That is the reason why they are not touching that 40,000. Do you think that ICAI is having Kanjatanam of 40,000 rupees? Intentionally, the gross receipts has been reduced to 50 lakh. Just to check that whether you are aware of the presumptive taxation route or not. Sir, in the last question, we have done a P&L based question. Are you all really with me? What is the income by sales? 2 crore 62 lakh, which is more than 2 crore. Have they mentioned that the cash payment are within 5%? Then how you will apply a higher limit of 3 crores? Are you all really with me? Oh, that means if it is a P&L account question, check the turnover limit. More than 2 crores, less than 2 crores. If it is a receipts and payments account, basically for profession. For profession only, generally they will give the receipts and payments. Check whether the professional receipt has exceeds 50 lakhs or not. I hope that it's a very good takeaway for you. And you tell me, my dear lovable students, you have to inform to the valuer that, sir, Jan Bas sir, I am also Jan Bas sir. Sir, for the previous year, 24-25, gross receipts of Amar is 49,60,000. Since it does not exceed 50 lakh, he is eligible to opt for presumptive taxation scheme under 44 ADA. That was the question's highlight. He was an advocate. So advocate means law. So, sir, law, medicine. Oh. In such case, his professional income would be 24,80,000, being 50% of 49,60,000. So gross receipts into 50%. It is more beneficial for Amar to declare profit of only how much? 7,24,100. A presumptive taxation, it is 24 lakh da. Normal route, it is 7 lakhs da. Which is better? 7 lakhs is better. That means you are not traveling through the presumptive taxation route. Only certain things you are supposed to do. You have to compulsory liable to maintain books of accounts. You are compulsory liable to do. In such case, his professional income would be 24 lakh 80, being 50% of 49 lakh 60,000. It is more beneficial for Mr. Amar to declare profit of how much? 7,24,000 as per the books of accounts, which is lower than the profit computed on presumptive basis under 44 ADA. Are you all really with me? However, for declaring profit, you have to maintain books of accounts under section 44A and get the same auditor under 44AB. Are you all really with me? This point will make the examiner really happy, and he will understand that you are having a fair level preparation for examination, my dear lovable students. Now I am going to calculate the long-term capital gain. Come on. Have you all settled with income from salary computation? Yes, sir, because nothing is there. Income from house property? Yes, sir. PGBP now? Capital gain. Always first finalize what is the capital asset. What is the capital asset? Listed equity share. For that listed share, have you paid STT? That means it's a super asset. How much rupees is the sale consideration? How much rupees is the sale consideration? 5,95,000. Already it is straight away given in the receipts and payments account. Am I right? Now less what of acquisition? Cost of acquisition. Don't say that indexed cost of acquisition. Because for super asset, there is no concept of indexation at all, whether it is before cutoff date or after cutoff date. Am I right? So the cost of acquisition is grandfather effect. Are you all really with me? Grandfather effect means, sir, earlier it was exempted, then it has become taxable. Tell me what is the full value of consideration? 5,95,000, right? How many equity share? 5,000. So 5,800 into on the date of it become taxable. On the date of amendment, how much rupees is the fair market value? 75. So take your calculator. 5,800 into 75 comes to 4,35,000. You tell me 4,35,000 or 5,95,000, whichever is lower. So I will choose 4,35,000. Or what is the real cost of acquisition? 1,21,800. So whichever is higher comes to 4,35,000. So you will be getting long-term capital gain of 1,60,000. Super. 1,60,000. Repeat once again. 1,60,000. This is a long-term capital gain covered under 112A. Why I am highlighting is we all know that up to 1,25,000 it is exempted. Any long-term capital gain taxed under 112A up to 1,25,000 it is exempted. Balance will be taxable at 12.5%. 12.5%. That we have to keep in mind at the time of computing of the tax liability. Computation of IFRS, we can easily compute cash gift of 84,000 because 21,000 into 4, these people are not relatives. So straight away it will be taxable under IFRS. That's it. Capital gain done. IFRS done. Automatically gross total income done. Sir, now coming to chapter 6A reduction. For LIC premium, will you get ATC? Repayment, principal portion of housing loan, will you get ATC? PPF subscription, will you get ATC? But maximum reduction under ATC itself will be restricted to 1,50,000. Sir, deduction under ATG, Prime Minister's Care Fund, 100% will be allowed since you have paid by other than cash. And deduction under ATGGC since you have transferred to a registered political party. So the total chapter 6A deduction will be 6,21,000. Look at the computation, man. Sir, we have calculated capital gain and we have calculated IFRS. We landed up with gross total income. We have reduced the chapter 6A of 6,21,000. You will be getting total income of only 4,33,860. Even that 4,33,860 comprises of special income which are 112A and other income. Am I right? Sir, what is 112A? 1,25,000. My dear lovable students, 4,33,860 minus what is the capital gain? 1,60,000. Am I right? Not 1,25,000. 1,60,000 comes to 2,73,860. For this 1,60,000 should be bifurcated into again two category, 1,25,000 and 35. This 35,000 will be taxed at the rate of 12.5%. So 35,000 into 12.5% comes to, that's how this 4,375 came. Can I? Now, my dear lovable students, that's it. 1,60,000 has been taxed. For this 2,73,860, I can enjoy basic exemption limit. What is my age? 58. So 2,50,000 is nil. So on this 2,73,860 classified into two category, 2,50,000 and 23,860. This 23,860 will be taxable at normal 5% tax slab. Am I right? So 23,860 into 5% comes to 1,193, my dear lovable students. Let me ask you one question. Is my total income exceed 5 lakh? Then I am entitled to claim rebate under. But 87A will not be applicable to 112A. Are you all really with me? 87A rebate can be claimed on all income except 112A income. Because already you enjoyed 1,25,000 rupees. And you are paying only a tax of 12.5%. Again, if you are enjoying 87A, it will be an anyayam. Am I right? That's a logic. 87A will not be applicable to 112A. So, I am having 4,375. This is the tax for 112A. And this is the tax for the normal income. Against that, you can claim 87A rebate. Sir, that means this will become knockoff. 4375 will be ultimately payable. So 4375 into 4% comes to 175. You will be getting 4550 as a tax liability. No advance tax details has been given. TDS details has been given. So this will be the gross and the net tax liability 4550. A beautiful, fantastic, outstanding question from the receipts and payments account. Are you able to connect all the dots very nearing to our examination? Yes, sir. Surely you would have got some extra points from this question. I just want to know what are the extra points in the comment section, my dear lovable students. This was very new to me. And pause for 5 to 7 minutes. Settle yourself and come back to me. We'll be doing a question which is illustration number 3 to say that we are, sir, 3 by 7. Yes, sir. I believe that you would have gone through question number 1 and 2 very pakka. We are moving into question number 3, my dear lovable students. Mr. Bashin, a resident individual, aged 52 years, age is 52, provides management consultancy service to various corporate and non-corporate clients, like a professional. His income and expenditure account for the year ended 31st March 2025 is as under. Sir, for business people, P&L will be given. For the professional people, income and expenditure will be given. The difference between P&L and income and expenditure are nothing. Only thing is, instead of writing P&L, they will write to excess of income over expenditure. That's it. So we have to start with the excess of income over. The third variety I am showing to you. One P&L is shown. One receipts and payments account is shown. The third variety is the income and expenditure. It's pakka equal to P&L account. By gross receipts, which is 60 lakh, which is more than 50 lakh. That's the highlight. That means don't go and scratch your head with the presumptive taxation. Just calculate only as per the normal. From profession, last year 75 lakh. So in the last year, since income exceed 50 lakh, in the current year, he is liable to deduct TDS. No TDS was deducted from any of the receipts. That is not my problem. That is the payer's problem, right? Interest on savings account. This has to be included in IFOS and it can be claimed as deduction under 80 TTA to the extent of 10,000. 80 TTB will not be applicable to this guy. By winning from lottery, this has to be taxable under IFOS. Net of cost of lottery ticket 500. Ayyada. Against the casual income, lottery ticket cannot be claimed as a. So 99,500 should be deducted from PGBP and 1 lakh should be included in IFOS. And for that, already the person who paid the lottery income would have deducted TDS at the rate of 30%. So 194B effect should be provided when you are calculating the net tax payable. Rent received, purely it's an IFHP income. It's an impurity for PGBP, removed from the PGBP and show it under IFHP. Employees remuneration, pakka business expenditure. Office and administrative expense, business expenditure. Rent and rates, business expenditure. Interest expenses, business expenditure. Office rent, insurance premium, professional fee, depreciation on computer, everything are prima facie allowed business expenditure. But I have to read the notes. Following details relating to financial year 24-25 has been given. Number 1, number 2, 3, 4, 5, 6, 7, 8, 9. There are 9 adjustments are there. Generally, this question, if it is repeated in exam, this is a past examination question of May 2023. Recent examination question. Generally, students feel this as very lengthy. Oh my God. Because in our book itself, it is carrying 1 page. In question paper, it will run for 2 to 3 pages. By seeing that itself, manasu uttruvaanga. Sit and read. The things will, nothing will be there. Adjustment number 1. Employees remuneration include this first point. To employees remuneration. Inside this, how much lakh? 15 lakh. Rupees 3 lakh paid to his wife. There is no restriction that you should not pay to wife and all. But it's a related party transaction. Provisions of 40A subsection 2 will be applicable. Only the payment should not exceed the market limit. That's it. Mrs. Meena, who's working as a manager in his office, sir, she does not have any technical or professional qualification, clubbing, and experience required for the job. The salary payment was as per the market rates in comparison to similar work profile. That means super adjustment they have given. Sir, no need to add back in PGBP because as per PGBP, what the provision is saying that if you make any payment to a relative, which is the related party transaction, which is over and above the market rate should be added back. That means nothing need to be added back in PGB. But this salary of 3 lakh should be shown or clubbed as income of Mr. Basim under the head salary. So there you should not forget to reduce standard deduction under 16 subsection 1A. That too depends upon which route he is going to travel. Am I right? This much point you should carry in your brain. Mr. Bashin owns a big house, wow, with 2 independent units. Unit 1 with 50% floor area has been let out for residential purpose at a monthly rent of 20,000. For the entire year, there is no vacancy concept and all. Unit 2 with a balance 50% of the floor area is used by Mr. Bashin as his residence cum office. Other particulars of the house: municipal value, fair rent, standard rent. Super, sir. That means for house property in exam, if you put a table like this, it will be pakka. Nothing. Let out portion 50%, self-occupied portion 25%, business portion 25%. In a sense means, my dear lovable students, total house is there. Out of 100% of the house, 50% of the house is let out portion. Remaining 50%, sir, half is self-occupied and remaining half is conducting business. Am I right? As we all know that, sir, gross annual value. So my dear lovable students, better to put a total column here. No, not quite. Gross annual value itself will start. Gross annual value. My dear lovable students, fair rent or municipal value, whichever is higher. You tell me 4,20,000 or 3,60,000. 4,20,000 or standard rent, whichever is lower, 4 lakh. So 4 lakh is the expected rent. Expected rent is 4 lakh. So expected rent is equal to 4 lakh. Expected rent or actual rent received or receivable. You tell me, sir, we are having expected rent. Am I right? What is the total expected rent? On that 50%, 2 lakh, then 1 lakh and 1 lakh. Am I right with my calculation? Now, actual rent received or receivable. What is the monthly rent? 20,000. So, 20,000 into 12, 2,40,000 rupees. Sir, for the let out portion only, that 2,40,000 will come. Others, it will be dash. Am I right? My dear lovable students, now gross annual value less LT bar MT paid by the owner. Am I right? You will get net annual value less deduction 30%, and you will be having IOBC. You will be getting income from. For this 50% portion, GA will be 2,40,000. Am I right? Is there any LT bar MT paid by the owner? Rates and tax include a sum of 10,000 paid as municipal tax of the house. So total is how much? 10,000. So LT bar MT, split it. 10,000 half, 5,000. Here 2,500 and here also 2,000. But for self-occupied property, this cannot be claimed as a deduction. I just apportion, that's it. Are you all really with me? So net annual value 2,40,000 minus 5,000 is the net annual value. 30% of 2,35,000. 70,500. Look, is there any IOBC? Sir, interest expense represent interest on capital borrowed from a nationalized bank for construction of the house. Construction was completed in financial year 10-11. Neither the loan nor the interest was paid till the due date of filing the return of income. No problem, because 24B accrual basis. Am I right? What is the total interest? Interest paid. Interest expense is what? This interest fully IFHP interest, my dear lovable students. So split the 80,000. Half of 80. 40,000. Next to 2 half. 20,000 and 20,000. Am I right? My dear lovable students, that's it. So 2,35,000 minus 70,500 minus 40,000. What is answer? 1,24,500. This will be the taxable income from house property. For self-occupied property, nothing is there. GAV will be nil. Am I right? LT bar MT cannot be claimed as deduction. So NA will be 0. Not 2,500, it will be 0. Hence 30% will automatically 0. But IOBC can be claimed if they are traveling through the optional tax regime. I have to read under what regime they are going to travel. Sir, you are required to compute the total income under the proper heads of Mr. Bashin for the assessment year 25-26 under the regular provisions of the income tax. Regular provision means, so he is going to travel through optional tax regime. So this 20,000 can be claim it as a 24B deduction. Sir, this is PGBP, profits and gains of business or profession. As per section 30, expenditure relating to building. If owner itself is owning the building, notional rent concept will not be applicable. And for this IOBC, 43B provisions will be applicable. 43B is saying that, sir, deduction on what payment basis? Actual payment basis. My dear lovable students, since it has not been paid during the financial year, this will be disallowed. So this 20,000 cannot be claimed. Sir, intra-head adjustment we can happily do, sir. So 1,24,500 minus 20,000 comes to 1,04,500 should be the taxable IFHP. One table will answer the things if you are properly controlled from the IFHP. Am I right, sir? 1,04,500, 1,04,500 is the answer. We have pakka tallied the IFHP. Can I proceed, sir? Sorry, sir. 1,04,500. That's it. Income from house property. One table will give you proper answer. All right. I'm continuing. Sir, I'm continuing one by one. Sir, income from salary. Okay. Have we completed full? No. Based on the actual rent received for unit number 1, that 50%, Bashin has debited 2,40,000 as notional rent for unit number 2, which is used for his profession. If you are the owner, as per section 30, notional rent concept will not be applicable. That means this 2,40,000 should be added back. This is notional rent to the owner itself. How it will be allowed in Income Tax Act, man? Expense on insurance premium 72,000 represent lump sum health insurance premium paid by Mr. Bashin for how many years? Effective from 1st July 2024 to 30th June 2027. That means 24-25 financial year, 25-26 financial year, 26-27 financial year, 27-28 financial year. It is, even though the premium is effective for 3 years, it is spreading over 4 financial year. That means 72,000 divided by 4, 18,000 is the attributable per year expenses. So you can claim 80D for that. For himself, his spouse and 2 dependent children. Said insurance premium was paid through account pay check, then beautifully you can enjoy deduction under 80D. Expense on professional fee paid include a sum of 1 lakh paid to Mr. Raunak, an Indian resident on which no TDS was deducted. 30% should be NABAC. There was only one block containing computer which came into existence only on 2nd April. 2nd April means more than 180 days. When new laptop for 1,60,000, printer and scanner for 40,000 was purchased, he charged depreciation at 60%. Wrong. In the entire cost of how much lakh? 2 lakh. Because 1,60,000 plus 40 comes to 2 lakh. And debited the income and expenditure. That means this depreciation 1,20,000 is of how much percent? So 1,20,000 divided by 60 into 40 means correct depreciation you will get to the extent of 80,000. So in place of debiting 80,000 in P&L, they have debited 1,20,000 extra 40,000 should be back, added back. Are you all really with me? Mr. Bashin has also taken a loan of 5 lakh from Nationalized Bank for his higher education of his son. Son is eligible family. During 24-25, he repaid principal of 75,000. There is no deduction. Along with interest of 40,000 can be claimed as deduction under 80E. This amount is not reflected in the income and expenditure account. Thank you. So no PGBP adjustment are required. You are required to compute the total income under the proper heads of income of Mr. Bashin for assessment year 25-26 under regular provisions of Income Tax Act. Assuming that he has not opted to pay tax under 115 BAC, also calculate the total tax payable by him. Before reading the question, it was something very big. But when you spend time on the question properly, nothing, man. Can we do the first head, income from salary? Actually, Bashin does not have salary income. But his wife is having salary income in a concern in which he is having substantial interest where she does not possess any professional or technical qualification. That means salary of Mrs. Meena, 3 lakh, less standard deduction under 16(1)(a). Why 50,000? Because he is traveling through the optional tax regime. So the income from salary will be 2,50,000. Am I right? This note, don't forget to write, man. Remuneration paid by Mr. Bashin to his wife, Mrs. Meena, who's employed as a manager in his office, would be included in his hands, since Mrs. Meena does not have any technical or professional qualification or experience required for the job. Those who have done clubbing, this point will be very comfortable. Income from salary. Can I proceed? Income from house property. Just now I have finalized with one single table. Instead of putting that table in our presentation, we are having IFHP let out portion, IFHP self-occupied portion. Let out portion GAV, actual rent received 2,40,000. Less LT bar MT, total 10,000. On that 50%, it's the share of the let out portion. Am I right? 5,000 can be claimed. NA will be 2,35,000. Less on that 2,35,000, 30% will be 70,500. 24B, total 80,000. On that 50% can be claimed for let out portion. So 40,000. You will be getting IFHP of 1,24,500. GAV notes has been attached. For the second 50%, I am supposed to calculate only for 25% IFHP. Since unit 2 representing 50% of the floor area, it is used for residence as well as for what purpose? It is assumed that it is equally used for residence and business purpose. That assumption is very important. For a self-occupied property, GAV nil, LT bar MT not allowed, NA will be nil. IOBC can be claimed as deduction, which is 80,000 into 50%. In that 50%, only 25% remain on the half only used for the business. So in self-occupied, so IFHP is loss of 20,000. Loss from self-occupied portion can be set off against income from let out portion. 1,24,500 minus 20,000 comes to 1,04,500. So the income from house property is 1,04,500. We have attached the income from house property 1,04,500. Very comfortable. Coming to the third headman, PGBP, a normal PGBP computation only, nothing big to break your heart. Instead of starting with net profit, please start with excess of income over expenditure, 36,97,500. Add expenses debited to income and expenditure account, but not allowable as a deduction. Remuneration paid to his wife, Mrs. Meena, no problem. As per PGBP, 40A subsection 2, related party transactions are allowed. But the only problem is, it should not be more than the market price. Question specifically said that it is not more than market price. Hence, no disallowance is needed for PGBP. Accepting. These are beautiful points from PGBP. I love this point. For example, municipal tax attributable to let out portion. How much portion let out? 50%. And self-occupied portion? 25%. Total? 75% should be added back. Because the remaining 25% are for business. That and all can be claimed as deduction under PGBP, because this 25% was blank in the IFHP. Because for this 25%, PGBP provisions will be applicable. Am I right? So 10,000 rupees has been debited. Out of this 10,000, 50% is for let out. 25% is for. So 75% should be disallowed. Remaining 25% is allowed. So 7,500 we are adding back. Super point. Are you all really with me? Interest on capital borrowed for construction of house attributable to let out and self-occupied portion not allowable. My dear lovable students, 80,000 was there, no? 80,000 was there, no? In that 80,000 debited to P&L account, 40,000 interest is for income from what property? Let out property. That 40,000 should be added back. And on the remaining 40,000, 25% is for self-occupied portion. So that 20,000 should also be back. That means remaining how much is there? 20,000 is there, which is 25% for business purpose. Business purpose means 43B will be applicable. Have they paid before filing return of income? No. So even that 20,000 should also be added back. Sir, you should not add back 80,000 in one shot. Okay? Answer will tally, but provisions are different. Because 60,000 why I am adding back? Because it's attributable to other heads of income. Sir, 20,000 why I am adding back? It is because of PGBP only. But 43B provisions has not been satisfied. Are you all really with me? Sir, notional rent for unit 2 used for business or profession as per section 30. If you are the owner of the building, for that building, no notional rent concept will be applicable. Should be added back. Insurance premium, it is personal expenditure. It is not allowable. Insurance premium should not be debited to P&L account. Should be back. Professional fees to Mr. Raunak. without deducting TDS on that entire 1 lakh. 30% should be added back. Depreciation as per books should be added back, and we can reduce as per the income tax calculation. Am I right? Less income credited to income and expenditure account, but not taxable as per business income. Interest on savings account should be taxable under IFOS. Winning from lottery should be taxable under. Rent received should be taxable under IFHP. Less depreciation. We have to manually calculate the depreciation. You will get the PGBP. We can calculate, no problem at all. Come on, man. Let me ask you the basic things. Sir, actually, 2 lakh rupees is the total. On that 2 lakh, 60% depreciation they have charged. But the allowed depreciation is only, what is the 60% comes to? No, what is the amount of depreciation they have charged? P&L account debited. So 2 lakh into 60% comes to 1,20,000. That much is not allowed. Only 2 lakh into 40% is allowed. That comes to 80,000. So extra depreciation of 40,000 should be enna back. We already added back 1,20,000. So now we have to reduce 80,000. That's what they have done. 80,000 rupees has been reduced. Automatically that 40,000 would have adjusted. Am I right? So my PGBP income will be 38,02,500. My dear lovable students, happily I can attach 38,02,500. No capital gain adjustment. IFOS is very easy. Whatever I have excluded from PGBP should be included in the IFHP. Look at here, man. Sir, sorry, IFOS. We interest on savings bank account 25,000. Don't forget to claim 80 TTA to the extent of 10,000. Winning from lottery, as we all know that against casual income, no expenditure can be claimed. So you have to add that lottery ticket cost also, and it will come to. And when you are calculating, after calculated the tax liability, don't forget to reduce 30% because TDS would have been deducted. So the IFOS would be 1,25,000. Can we complete chapter 6 and go up? Yes, a deduction under what? 80D. Totally 72,000 paid, but it is for how many years? 4 years, for financial year. That's why 18,000 can be claimed as deduction. Since it is for self, spouse and dependent children, it is fully allowed. Am I right? Deduction under 80E, only what is allowed? Interest is allowed. So how much rupees? 40,000. Deduction under 80 TTA, you can claim only to the extent of. So you can happily enjoy 68,000 rupees as Chapter 6A deductions. Come on, man. The gross total income is 42,80,000. Less what 6A deduction? Chapter 6A deduction. Just now we completed what? 68,000. So you will be getting taxable income of 42,14,000. 42 lakh, which is less than 50 lakhs. No surcharge confusions. Is there any special income? No, sir. All are normal income only. But except casual income. Am I right? You are having winning from lottery? No. So that 42,14,000 should be classified into two categories, my dear lovable students. Number one, 1 lakh. On that 1 lakh, 30%. Am I right? Remaining 41,14,000. What route? 41,14,000 should be classified into two categories. Up to 10 lakhs, more than 10 lakhs. More than 10 lakhs at the rate of. Since his age is normal, so 1,12,500 rupees will be the tax payable up to 10 lakh. Am I right? Sir, in excess of 10 lakh means 41,14,000 minus 10 lakhs comes to 31,14,000 into 30% comes to 9,34,200. This is 1,12,500. Total 10,76,700. Am I right? On that, health and education says at the rate of 4%, my dear lovable students, including the casual income, I am charging the health and education cess. The total tax liability will be 11,19,768. Already on lottery income, 30% TDS would have been deducted. So that 30,000, the tax payable will be 10,89,768, which will be round off to 10,89,770. Are you feeling very much comfortable with regard to illustration number 3? These working notes and all, please attachment as per 48.2. Remuneration paid to Mrs. Meena is allowed since it is as per what rate? For construction of house attributable to business portion, that is how much percent of the 80,000 is not allowable. Are you all really with me? Sir, since it is not paid on or before due date, filing return of income by virtue of what be? Not allowable under 30, which is, sir, notional rent debited to P&L account should be enna back. Since Mr. Bashin himself is the owner of the, Mr. Bashin is required to deduct tax on professional fee paid to Mr. Raunak since his gross receipts from profession exceed during the previous year 23-24. 30% of the sum paid to Mr. Raunak, resident without deducting tax at source, disallowed in previous year 24-25. Depreciation allowable for 2 lakh is 1,60,000 being new laptop, 40,000 being printers into how much percent? That means 64 plus 16 as it was put to use for more than 180 days. Printers and scanner for 40,000 are also eligible for higher rate of depreciation at the rate of. That's it with regard to brilliant question. Number 3 also comes to an end, my dear lovable students. I will be solving question number 4 to say that we are done with 4 by 7. 5 to 7 minutes. Just pause the video, go through and come back. We will be continuing. Yes, my dear lovable students. We have done with 3 questions, man. 3 different questions actually. Question number 1 is from P&L. Question number 2 is from receipts and payments account. Question number 3 is from. So I'm going to do a 4th question out of 7 questions. Miss Parvin, aged 55 years, is a chartered accountant in practice. She maintains her accounts on cash basis, as we already know what to deal with cash basis. Her income and expenditure account for the year ended 31st March read as follows. Income and expenditure audit fee has been given. Taxation service has been given. Consultancy has been given. The gross receipts exceed 50 lakh. That means we have to take care of only the normal route, nothing to talk about the presumptive. Dividend on in shares of X Limited, an Indian company gross. My dear lovable students, this has to be taxed under IFRS, as we all know. Income from UTI should be taxed under IFRS. Honorarium received from various institutions for valuation of answer paper should be deduct from PGBP and should be shown it under IFRS. Rent received from a flat let out should be shown it under IFHP. That means these are impurities for PGBP, should be removed from the P&L account by deducting it from the net profit. Am I right? Net profit has been given. This is a wrong net profit. Salary to staff, stipend to article assistant, incentive to article assistant, office rent, printing and stationery, meeting, seminar and conference, purchase of car. Is purchase of car revenue expenditure, capital expenditure? So should be in the back. Plus you have to provide depreciation on the motor car. Am I right? Repair, maintenance and petrol of car, traveling expense, municipal tax paid in respect of house property. This is an impurity for PGBP, should be in the back. And you can reduce it under the head income from house property, should be add back and reduce. Are you all really with me? That's it, man. Other information. Allowable rate of depreciation on motor car is 15%. We need that info because for motor car, amount debited to P&L account should be added back and we have to reduce the depreciation. Value of benefit received from client during the course of profession is 10,500. That means this guy got a gift on account of business or profession. As per section 28 clause 4, 28 is a charging section which is saying that any gift or perquisite you are receiving on account of the business or profession should be included in PGBP. But this 10,500 has not been included to the net profit. So we have to manually add back that 10,500. Am I right? Incentive to article assistant represent amount paid to 2 article assistant for passing CA intermediate examination in first attempt. It's allowable. My dear lovable students, that is a business expenditure, can be debited to P&L account, already debited to P&L account, no adjustment is required. A repair and maintenance of car include 2,000 for the period from 1/10/2024 to 39/2025. That means even next financial year expense also debited in the current year. Since the SSC is following cash system, it will not be treated as prior period expenditure or the future expenditure. Anything debited to P&L account will be allowed as a deduction. Salary include 30,000 to a computer specialist in cash for assisting Miss Purvin in one professional assignment in a single day to a single person. If cash payment exceeding 10,000, that entire amount should be added back as per 40A subsection 3. Traveling expense include expenditure incurred on foreign tour of 32,000, which was within RBI limits, so nothing need to be added back. Medical insurance premium on health of dependent brother. Is brother form part of family? 80D is applicable only for set 1 and set 2. 80D, SSD, and parents dependent or not. Am I right? And major son dependent on our amount. 5,000 put it on dustbin, but 10,000 allowed but paid in cash, not allowed. Are you all really with me? Because medical insurance premium paid by check. She invested an amount of 10,000 in NSC. For that, she is entitled to claim ATC. She paid 70,000 towards advance tax. Finally, after you calculated the tax liability, reduce that 70,000 as advance tax. Compute the total income and tax payable by Miss Purvin for assessment year 25-26 in almost beneficial manner. That means we have to calculate both the tax regime. Always first calculate the optional tax regime. Then we will move into the default tax regime. I believe that you are able to handle this question. Computation of total income and tax payable by Mr. Purvin for assessment year 25-26 under the default tax regime. First they are putting, okay fine, we can put no problem at all. Can I first do with the income from house property? Income from house property, look at here man. Sir, gross annual value. Sir, 80 gross annual value. How much is the amount given? 85,600 is the amount credited in the P&L account. Am I right? Look at here man. This 85,600 should be removed from PGBP and should be included in IFHP. That we have done. Less local tax or municipal tax paid. Look at here. Municipal tax in respect of house property. Municipal tax paid, they said. Am I right? So this 3,000 should be added back in PGBP and should be reduced from IFHP. You will be getting net annual value of 82,600. On that you can claim 30%. 30%. Sir, this is allowed under both the default tax regime and the optional tax regime. So income from house property will be 57,820. We have completed 57,820. The real hero we are coming, PGBP, my dear lovable students. Start with net profit. Is net profit, sir, having impurity? Yes, sir. Add expense debited but not allowable. Salary paid to computer specialist in cash in a single day, single payment exceed 10,000. That 30,000 should be added back. Amount paid for purchase of car. It is a what expenditure? Capital expenditure. 80,000 should be added back. Municipal taxes paid in respect of residential flat. This is an impurity for PGBP. This amount of 3,000 should not be debited to P&L account. So this 3,000 should be added back. Add value of benefit received from client. You will miss this point. As per 28 clause 4, any gift or perquisite received on account of business or profession should be included under the PGBP. So manually we have to add this 10,500. So the subtotal will be 10,51,724. Am I right? Less income credited but not taxable under this head. These are impurity. Like dividend on shares of X Limited. Sare, dividend should be taxable under IFRS. Now it has been credited to PGBP. Removed it from PGBP, shown it under IFRS. Income from UTI should be taxable under IFRS. Now it has been credited to PGBP. Deduct from PGBP, include in IFRS. Honorarium for valuation of answer paper. Sir, this is an IFRS income. Deduct from PGBP, include in IFRS. Rent received should be taxable under IFHP. Deduct from PGBP and show it under IFHP. This much you will get. Sir, less depreciation on motor car, because motor car is a capital expenditure, but depreciation on motor car is allowed. For that purpose only they have even given the rate also. So what is the value? 80,000 into 15% comes to 12,000. We are assuming that the motor car has been put to use for more than 180 days and there is no additional depreciation concept and all for motor car. You will be getting profits and gains of business or profession comes to 9,20,200. Am I right? That's what 9,20,200. There is no capital gain. Straight away moving into what? IFRS. Because we have excluded certain income from PGBP, those income has to be included in the IFRS. Am I right? Dividend on shares of X Limited. Question specifically told that it is gross. So entire 10,524 should be included in income from UTI. It will be taxable under IFRS. Honorarium will be taxable under IFRS. So the IFRS will be 33,924. That's it, my dear lovable students. We have finalized the gross total income. Clear? Less deduction. What deduction? Chapter 6A deduction. Sir, now we are traveling through the default tax regime. There is no question at all. So your total income will be 10,11,944. Last number is 4. That 4 rupees put it on. It will be round off to 10,11,940. Now this is what tax regime? Default tax regime. Simple. House property, normal income, special income. Normal income. PGBP, normal income, special income. Normal income. IFIS, normal income, special income. Normal income. That means your total income comprises of only normal income. Am I right? Which is less than 50 lakh. Am I right? Which is more than 7 lakh. Am I right? That means there is no question of 87A rebate at all. As we all know that, sir, in default tax regime, we are having up to 15 lakhs. Are you all really with me? Sir, up to 3 lakh rupees is nil. 3 lakhs to 7 lakh. For the next 4 lakh, 5%, which comes to 20,000. For the next 3 lakh, 30,000. For the next 2 lakh, 15%, that comes to, sir, 1,791. So you will be getting 51,791. Am I right? On that, health and education says at the rate of total tax liability will be 53,863. Less advance tax paid. How much? 70,000. Less tax deducted at source under 194. Sir, we are assuming that they would have deducted the TDS 10%. Sir, less 194K on the, sir, dividend from UTI, they would have deducted 10%. So tax payable or refundable comes to 17,949 refundable. Round off 17,940. If you are traveling through the default tax regime, I'm going to travel through that. So I have to rework the total income because total income and tax payable. Sir, I'll be continuing with gross total income. What is the gross total income? 10,11,944. But in default tax regime, I have not claimed the chapter 6A deduction. But under the optional tax regime, we can claim chapter 6A deduction. Can we claim? Yes, sir. Look at here, man. Income under that, income from house property, PGBP and IFOS would remain the same because there is no special item which we have, sir, missed to claim in default tax regime in this question. Am I right? So the gross total income will be same. Less deduction under what? Chapter 6A. I'm moving into note number 4 to finalize the chapter 6A. Nothing. 80C. If you invest in NSC, you are entitled to get deduction under 80D. Since it has been paid by cash, you are not entitled to claim deduction under 80D. Am I right? So extra 10,000 benefit you can claim under the optional tax regime. Sir, ஒரு 10,000 ரூபாய்க்கு ஆசைப்பட்டு, sir, total income has become 10,01,944. This will be round off to 10,01,940 under optional tax regime up to 10 lakh. 1,12,500. Am I right? So up to how much lakh? 10 lakh, 1,12,500. Sir, more than 10 lakh, 30%. So 10 lakh 1,940 minus 10 lakh comes to 1,940 into 30% comes to 582. So 582 plus 1,12,500 comes to 1,13,082 is the total tax payable under the. On that, add health and education cess of 4%. Total tax liability will be 1,17,605. On that, you reduce advance tax, same 70,000, same 194,1052, same 194K 760. Total this much. Tax payable will be how much? 45,793. 10,000 ரூபாய்க்கு ஆசைப்பட்ட பிரச்சனை. Sir, there the government is ready to give you a refund. Here you are liable to pay 45,000 tax. What should be the conclusion? Since there is tax refundable under the default tax regime and tax payable under the regular provision, it would be beneficial for Mr. P to pay tax under the default tax regime under 115 BAC. Are you all really with me? This is a decision-making question, whether to travel through the default tax regime or optional tax regime, that other variety what is available in computation of total income. I believe that you are feeling very comfortable to get at least 12 plus marks in the first 15 mark. Am I right, sir? Sir, we have done 4 questions out of 7 questions, my dear lovable students. Sir, we are going to step into the 5th question. Before I step into 5th question, as I said, take a break of 5 to 7 minutes time Just go through the important adjustment and just tell me in the comment section that what and all were the new to you. Come back. We will quickly finish it off illustration number 5, sir, and we will proceed to 6 and 7. Yes, sir. I believe that you would have gone through the first 4 question, different variety question. Question number 5 is a unique question. I will not say that a variety, but a unique question to solve before your exam. Very good question according to me. Mrs. Kasi, a resident individual aged 62 years. That means senior citizen, individual and resident. That means the assessee, sir. We have to give respect. Is a qualified medical practitioner. That means doctor. She runs her own clinic. Income and expenditure of Mrs. Kashi for the year ended 31/3/2025 is as under. That means income and expenditure has been given. So net profit, income and expenditure, either excess over income, net profit, whatever it may be, 55,34,000. This will contain impurities, my dear lovable students. By consultation fee, 74,28,000. Direct income, it has exceeds 50 lakh. So no presumptive taxation issue. Salary received from True Care Hospital Private Limited. This should be taxable under the head income from salaries. So this has to be eliminated from the income and expenditure account, deducted from PGBP and included in salary. Rental income from house property, this should be included in IFHP. That means removed from the PGBP and included in IFHP. Dividend from foreign company gross, this has to be included in IFOS. Super. 3 different income heads has been given. Salary, house property, IFOS, but everything has been credited to the PGBP. This is an impurity for the PGBP, so we have to remove it and we have to include in the respective head. Salary to staff, general PGBP expenses. Administration expense, general PGBP expense. Rent of clinic, general PGBP expense. Conveyance expense. Oh my God. We have to scrutinize what this conveyance is all about. Right, sir? Yes, sir. Power and fuel, general PGP expense. Interest on housing loan should be in the back. Added back because this is an item related to IFHP, an impurity for the PGBP. To interest on education loan for son. Sir, that can be claimed as deduction under 80E. Amount paid to Scientific Research Association. That means contribution to outsider. Notified under section 35, this will be allowed only if the assessee travel through the optional tax regime. Am I right? She's working part-time in True Care Hospital Private Limited. That's why she's getting salary. Her salary details are as under basic pay 85,000 per month. Transport allowance 5,000 per month. Total 90,000 per month. So tell me 90,000 into 12. 10,80,000. That's why 10,80,000 rupees salary has been credited to the P&L account. Am I right? This has to be deducted from PGBP and should be included in the income from salary. A part done. B part. Further, during 24-25, her son had undergone a medical treatment in True Care Hospital Private Limited, free of cost. Sir, in that hospital only she is working. Sir, medical treatment can be provided either in India or outside India. If it is in India, 3 places other than 3 places. 3 places. Employer hospital, government hospital, CIT approved hospital, fully exempted. This is employer hospital. This will be a tax-free perquisite. Am I right? Hospital would have charged a sum of 1,60,000 for a similar treatment for unrelated person. But this 1,60,000 will not be treated as perquisite in the hands of this guy. Am I right? Point number C. She owns a residential house. Okay, sir. The reconstruction of the house. The reconstruction. It's not construction or acquisition. That means maximum higher limit of 2 lakh cannot be claimed. Maximum 30,000 can only be allowed. One word creates this much of provision. Reconstruction of the house was started on 1/4/2024 and was completed on 30/9/2024. 6 months it took for reconstruction. After reconstruction, ground floor of the house is self-occupied by her, while first floor has been lended out since 110. That means half of portion. Both the floors are of what area? Monthly rent is 40,000. Tenant also pays 3,000 per month as power backup charge. Super. Fantastic. This 40,000 should be taxable under income from. Whereas Power backup charge of 3,000 should be taxable under IFOS. Am I right? She took a housing loan of 25 lakh for reconstruction. For that housing loan, she would have paid interest. That interest we have to bifurcate between the self-occupied portion and the let-out portion. In let-out portion, it will be restricted to 30,000. Interest on housing loan for the period 1/4/2024 to 39/2024 was 1,20,000. Basically, for the first 6 months, it was 1,20,000. And for the period for the next 6 months was how much lakh? So total comes to 2,20,000 is the interest. This has to be bifurcated into two between let out portion and the self-occupied portion. So 1,10,000 to the let out portion, 1,10,000 to the self-occupied portion. During the year, she also paid municipal tax of financial year 23-24. Last year municipal tax has been paid in the current year of rupees 5,000, and financial year 24-25 current year is 5,000. Sorry, LT bar MT paid by the owner. Last year paid, current year can be claimed it as deduction. Current year paid, current year can also be claimed it as deduction. Total 10,000 is there. Should be bifurcated between SOAP and LOP. For SOAP 5K and for LOP 5K, SOAP 5K cannot be claimed it as a deduction. Other information. Conveyance expense. In P&L account, one conveyance expense was there, no? Includes a sum of 48,000 incurred for conveyance from house to True Care Hospital Private Limited and vice versa in relation to our employment. It's a salary related expenditure, should be added back. So that 48,000, sir, out of conveyance, sir, 48,000 is personal expenditure to go to the hospital where she is working. Should not be debited to P&L account, should be added back, my dear lovable students. Power and fuel expense include a sum of 10,000 incurred for generator fuel for providing power backup to the tenant. My dear lovable students, this 3,000 per month, that means 36,000 you are going to tax it under IFOS. From that 36,000, reduce this 10,000. Balance 26,000 will be the taxable IFOS. Am I right? Beautiful adjustment. Administration expense include a sum of 10,000 paid as municipal tax for our house. Should be back. Because LT bar MT, last year 5,000 plus current year 5,000, 5 plus 5. That 10,000 is included in the administration expense. Should be back. Added back. Super, sir. Clinic equipment details, sir. This is for the purpose of calculating depth. Opening WDV of the clinic equipment was 5 lakh. Fresh purchases made on 28/8 was 78,000, which was paid in. That's it. 40A subsection 3 will be applicable. No depreciation will be provided. That means you have to calculate 5 lakh into 15%. That's it. Comes to only 75,000 depreciation can be allowed. For this cost of 75,000, no depreciation will be allowed. Don't get confused with this 75 and this 75. Am I right? She also paid tuition fee of rupees 40,000. My dear lovable students, ATC. For her granddaughter. Granddaughter is not family. Only for own child. Peramagal, Marumagal, ATC, Kadayadu Magal, which has been debited to her capital. That's it. She availed a loan of 25 lakh from bank for higher education for her son. That's good. She repaid principal 3 lakh. No deduction. Interest of 1,56,000. You can claim 80. Required. You are required to compute the total income and tax liability of Mrs. Kashish for assessment year 25-26, assuming she's not opting for the provisions of 115 BAC. That means she's going to travel only through that. A straightforward, beautiful question. Can we knock it off? Computation of total income and tax liability of Mrs. Kashish for assessment year 25-26. Salary computation we are going to make. Is she working in any hospital? She's getting basic pay 85,000. So 85,000 to 12, 10,20,000. Transport allowance she's getting. Is she blind? No, sir. So 3,200 cannot be claimed. So fully taxable. Am I right? So 5,000 into 12, fully taxable, 60,000. Have she got any medical treatment from a hospital which is owned by employer? So cost of treatment for son in True Care Hospital Private Limited is exempt, since value of medical treatment provided to an employee's family member in any hospital maintained by employer is excluded from the definition of perquisite. Am I right? So the gross salary is 10,80,000. Is she going to travel through optional tax regime? So less standard deduction under 16(1)(a), Actual salary or 50,000, whichever is lower, sir, 50,000. So the income from salary will be 10 lakh 30,000. I believe that everyone would have, sir, understood what is 10 lakh 30,000. Pakka? Coming to income from house property, two parts of the houses are there, sir, basic floor and the first floor. Am I right? So income from house property, let out portion and the self-occupied portion. First, I am going to calculate the let out portion, first floor. GAV, how much is the monthly rent? 40,000. Actually, generally students will do 40,000 to 12, 4,80,000. But after reconstruction only it has been let out. That is a very important point in this question. So 40,000 into 6 comes to 2,40,000. Am I right? Less LT bar MT paid by the owner. My dear lovable students, last year's 5,000 paid in the current year. Current year 5,000 paid in the current year. Total 10,000 paid. Out of that 10,000, 50% is for let out portion. So 5,000 can be claimed as a reduction. The NAV will be 2,35,000. On that claim, 30%, which come to 70,500. Already IOBC is there. Interest on borrowed capital is there. For the first 6 months, 1,20,000. For the next 6 months, 1 lakh. Total 2,20,000. Half of that comes to 1,10,000. There is no restriction for the let out property. Yeah. So you will be getting income from let out portion 54,500. Happily accepting. Coming to the self-occupied portion, remaining 50% GAV nil, less LT bar MT not applicable, NAV nil. Sir, hence there is no question of 30% at all. Is she going to travel through the optional tax regime? Then IOBC can be claimed. Am I right? IOBC can be claimed, which is 1,10,000. But since this is not for construction, not for acquisition, this will be restricted to. So loss from self-occupied property is 30,000. Can you happily knock off income from house property? Can we do intra-head adjustment? You will be getting income from house property of 24,500, my dear lovable students. That's it with regard to the house property calculation also. Coming to the real PGBP. Sir, can we do PGBP? We have to start with the net profit. Sir, this net profit contains impurities, right? Less, sir, this income has to be taxed under other heads of income. These are impurity for the PGBP. Salary received, that income should be taxable under salary. Rent received from house property should be taxable under IFHP. Dividend from foreign company should be taxable under. That means the subtotal comes to this much. Depreciation on clinical establishment, only on 5 lakh opening, you are entitled to get 15%. Because newly acquired asset has been purchased by cash. 40A subsection 3 provisions will be applicable. On addition 75,000, no depreciation because it has been paid by cash. Only 75,000 depreciation is allowable. My dear lovable students, this item has been unnecessarily debited to P&L account. Because of that, the net profit would have come down. Should be in a back. For example, interest on housing loan. It's an IFHP item. It's not a PGBP item. Should be in a back. Interest on education loan for son. It's a personal expenditure. Should not be debited to P&L. Should be in a back. Conveyance expense. It is related to your salary income. Am I right? Sir, 48,000. Sir, to cover all these conveyance expenses, transport, traveling, going there, coming here, drinking tea only, we are giving standard deduction of 50,000. Am I right? So don't claim conveyance expense again as a deduction under the salary. But that should not be debited to what? P&L, because it's not a business expenditure. It's a salary income related expenditure. Should be in a back. Power and fuel expense incurred for providing power backup to the tenant. Sorry, it's an IFOS related item. Should not be debited to P&L. Should be in a back. Municipal taxes paid to residential house. Sir, municipal tax is an expense relating to IFHP. Should be in a back. So the pure PGBP will be 45,23,000. Are you able to appreciate? Every adjustment, are you able to appreciate? With God's grace, there is no capital gain adjustment. Can I come to the IFOS, man? Whatever you have deducted from PGBP should be included in like power backup charge. This is a beautiful adjustment in this question. Actually, client is giving us 3,000 per month. So 3,000 into 6 comes to 18,000. But in order to get that 18,000 from our pocket, we have spent 10,000. That means remaining 8,000 rupees will be taxable. And dividend from foreign companies, sir, whether you get dividend from domestic company or foreign company should be taxable under. So the IFOS income will be 68,000. That's it with regard to the gross total income. My dear lovable students, the gross total income is 56,45,500. Am I right? Less deduction under chapter 6A. Deduction under? There are so many chapter 6 items has been given, like ATC tuition fee not allowed because the assessee is wrong. The tuition fee has been paid for grandchildren, not allowed. Deduction under 80E, my dear lovable students, under 80E, interest will be allowed, principal will not be allowed. So 1,50,000, 56,000 can be claimed. So from the gross total income, if you reduce chapter 6, you will be getting total income of 54,89,500. 54, which is more than 50 lakh. The assessee is liable to pay a surcharge of 10%. Simple. 54 lakh, sir, 89,500. We can bifurcate. What route, man? Optional tax regime. So up to 10 lakh, more than 10 lakh. Am I right? Up to 10 lakh. What is the age? 62. So more than 60. Don't say 1,12,500. It is 1,10,000. Am I right, sir? Sir, more than 10 lakh, which is 44,89,500 into how much percent? 30% comes to 13,46,850 plus 1,10,000 comes to 14,56,850. On that pay surcharge of which comes to 1,45,685. On both the figure, sir, you will be getting subtotal. You have to add health and education cess at the rate of, you will be getting total tax liability of 16,66,636. That last is 6, should be round off to 16,66,640. What a beautiful fifth question, my dear lovable students. I believe that you are able to appreciate or understand what the computation of total income is. Sir, if you are just listening and going to exam, you will know what adjustment is, but you will not be able to complete that within time. If you want to complete within that time, sit in your home. I know that there are so many questions will be there. I personally choose the 7 question. You try to do the 7, at least 7 question on a repeat mode, loop mode. Then automatically you will get the flow of solving computation of total income. Just take a break of 5 to 7 minutes of time. Go through the adjustments, my dear lovable students. Sir, then you just come and join with me for illustration number 6. Then we will quickly say that, sir, 6 by 7 will comes to an end. We are having only 2 more in our pocket to complete, my dear lovable students. Yes, sir. I believe that you would have done 5 questions out of 7 questions, man. Sir, there are so many questions are there in computation of total income. Which 5 or 7 question I have to redo continuously means, that's why from every area or every slot I have picked one question. In that we are done 5 question, beautiful varieties of 5 questions. 6 question is fantastic, outstanding, brilliant. Whatever words you are having in English, you say for next 2 hours. That much good question. Mr. Pramod, a resident aged 55 years, is a retail trade. He furnishes the following information for assessment year 25-26. By sales 70,80,000. 70,80,000 is less than 2 crore. So he is entitled for presumptive taxation route. Closing stock given, opening stock given, purchase given, transport charges given, GP given, rent from house property is a impurity for PGBP, should deduct from PGBP and should be included in IFHP. Rent from furniture is an impurity for PGBP, it's an IFOS income. Because by letting out furniture, if you are having a rent, that should be taxable under IFOS. Salary given, rates and taxes given, administration expense given, depreciation given, net profit given. That net profit will be having impurities. We have to remove that impurities. Other information. All the sales are by account pay check or through bank transfer. That means when you are calculating the presumptive taxation, higher rate of 8% will not be applicable. Lower rate of 6% will be applicable. That highlight they are giving. The opening and closing stock have been overvalued by 15,000 and 20,000 respectively. It's not undervalued, man. It is overvalued. So because of overvaluing, closing stock profit would have increased. So reverse treatment we should do. Instead of, sir, in case of opening stock overvaluation, profit would have reduced. We should add back. Rates and taxes include GST liability of 5,000 paid on 1/5 and municipal taxes for the let out property 7,000. This 7,000 is related to IFHP. It's an impurity for PGBP. Should be added back. Whereas rates and taxes for GST, all taxes should be paid before filing the return of income. Since it has paid before filing the return of income, 43B disallowance will not be applicable because all taxes, duties, cess and fees payable should be paid before filing the return of income. Administration expense include 25,000 paid to donation. Sir, donation is not a business expenditure, should be in a back. To National Children's Fund and payment for laptop purchased on 15/5 for 60,000 through bank transfer. Both 25,000 debited to P&L and 60,000 debited to P&L should be in a back, added back. And for this donation to National Children's Fund, you are entitled to claim ATG, and for laptop, you are entitled to claim depreciation. Transport charges include 30,000 paid in cash, no problem, because for GTA in a single day, 35,000 rupees limit is there. Certain people, students will add back this in a cash single day. You have to read it, transport charges, very specific. He incurred a loss of rupees 8,000 on sale of equity share, which were purchased on 10/6. Sir, that means it's a long-term capital loss because he incurred a loss of 8,000 on sale of what share? Equity share on 10/2/2025, which were purchased on 10/6/2024. Is it a short-term or long-term? Short-term capital asset or long-term capital asset? Short-term. Short-term capital loss can be set off either again short-term capital gain or long-term capital gain. We have to check the other information. Till now, nothing is there. Depreciation include 1,200 as depreciation on trademark. Wrongly charged at how much percent? Sir, for intangible asset, 25% is the correct. That means there is a short depreciation of 10%. We have to extra provide the 10%. He deposited 50,000 in PPF, ATC. He has paid LIC of 60,000, ATC. He paid interest of 70,000 on loan availed in 1924. Higher education of his wife. Wife is allowed person. Higher education of loan, he can claim 80. These are the requirement. That is the I love you area. Compute the total income. Okay, sir. And income tax payable by Mr. Pramod for assessment year 25-26. Business profit is computed as per the what provision? Normal provision. And he opt for section 115 BAC. Means he's not going to travel through the presumptive taxation and all. He's going to travel through the normal provision, that too under the what tax regime? Default. So normal provision, default tax regime. Option number 2. He opt to compute business profit under the presumptive taxation under 44 AD and does not opt for 115 BAC. That means he's going to travel through the presumptive taxation route under 44 AD and he is going to travel through the optional tax regime. Am I right? Requirement number 3. Business profit is computed as per the normal provisions of the Income Tax Act and it does not opt for section. That means he is going to travel through the normal tax regime or optional tax regime. The business profit is optional tax regime, normal route. Both are same. Normal provision without 44 AD. Yes, sir. Sir, which option is advantageous to Mr. Pramod? It's a past examination, November 2023 question. A beautiful normal route versus presumptive taxation route. DTR versus OTR. Full AVL Puriel in one question. That means if you practice this question, my dear lovable students, that's it. Tax comes to an end. Everything will be revising, man. First one, have Telivu. Computation of total income and tax payable by Mr. Mirod for assessment year 25-26 as per the normal provisions of the act. That means he is to go into travel through the what? Normal provisions means books of accounts are presumptive taxation. Normal provisions means books of accounts. Normal provisions means, one second, man. Normal provisions means books of accounts. Plus what tax regime? Default tax regime. Super. Opting for 115 BAC. Is there any salary income? All right, man. There is no income from salary related data available in the question. So can I proceed? Income from house property. Can we calculate? Sir, come on, man. Sir, income from house property. How much is the rent? 1,80,000. Let me open the question here. Then it will be very easy for me to track the question and answer. Sir, 1,80,000 rupees. Question number 6. 1,80,000 rupees is the rent credited to P&L account. That has to be removed from PGBP and it has to be shown it under IFHP. So that is a gross annual value. Less LT bar MT paid by the owner. As a part of adjustment, they already said that municipal tax for let out property, specifically let out property 7,000, should be added back in PGBP and it can be reduced in IFHP. You will get the NAV. On that 30% you can claim, you will get IFHP of 1,21,100. Are you comfortable with IFHP? Coming to PGBP, man, the real hero. Sir, how you are going to calculate the PGBP? Normal route or presumptive taxation route? Normal route, right? So what is the net profit? Net profit is 10,46,000. That net profit contain impurity. You tell me, stock is overvalued or undervalued? Overvalued. So because of overvaluation of opening stock, what will be the impact on profit? Profit will reduces because opening stock increases, profit reduces. Should not happen, should be in a back. That's what add overstatement of opening stock 15,000. Am I right? Because of overstatement of closing stock, what will happen to profit? Profit reduces. That means 20,000 should be reduced. So you will be getting 10,41,000 as the correct profit after stock adjustment. Am I right? Add expense debited to P&L but not allowable as deduction. For example, GST liability, since it has been paid before filing the return of income, no 43B disturbance will be there. It will be allowed as a deduction. Municipal tax for let out property. It's an impurity for PGBP. It should not be debited to what account? P&L account. Should be in a back. That's why 7,000 we are adding back. Donation to National Children's Fund. Sir, this is not a business expenditure, sir. This is charity, sir. This should not be debited to P&L account as a business expenditure, sir. Should be in a back. Payment for laptop is a capital expenditure, but depreciation on laptop will be allowed as a reduction. Transport charges 30,000. No disallowance will come. Why? Because for a GTA, in a single day to a single person, you can pay subtotal is 11,33,000. Less income credited to P&L but not taxable as business income. You tell me rent from house property should be deducted from PGBP and should be included in IFHP. Rent from furniture should be deducted from PGBP and should be included in IFOS. Less depreciation, sir, on trademark. Actually, they should have given depreciation at the rate of, but they have provided only, so 10% short. Am I right? What is that? So this 1,200 rupees is 15%. Calculator. 1,200 divided by 15 into 10. So that 800 extra depreciation we can provide. Or rather, you can do one thing. Whatever depreciation they have provided is wrong depreciation. No, you can fully add back and you can reduce 25%. That is also allowed. On laptop 60,000, we all know that for computer and laptop 40% depreciation is allowed. So 24,000. So PGBP will be 8,08,200. Can I proceed? Working note, just read it. Sir, net of overstatement of opening stock and closing stock also can be done. That is nothing, man. Opening stock 15,000 we have added back. 20,000 we have reduced. So net of 5,000 is there. That adjustment also you can do. Are you all really with me? Since GST liability has been paid before the due date of filing return of income under 139(1), same is deductible. 43P disturbance will not be there. Sir, for GTA, it is not disallowed since the limit for one-time cash payment is 35,000 in respect of payment to transport operator. Trademark are eligible for depreciation at, so if 1,200 is 15%, sir, into 25 means 1,200 being the wrong depreciation. Alternatively, depreciation of 1,200 wrongly claimed can be added back. An amount of correct depreciation of 2,000 can be deducted. Am I right? That's it. With regard to the what? PGBP. You will be getting PGBP of 8,08,200. Let me ask you a question. How you have computed this PGBP? Not by traveling through the presumptive taxation route, but by traveling through the normal route. Sir, coming to capital gain. Actually, it's a capital loss. Short-term capital loss can be set off only against short-term capital gain or long-term capital gain. Other heads, inter-head adjustment and capital gain is not applicable. Short-term capital loss of 8,000 on sale of equity share can be set off against what gain only? Either short-term capital gain or long-term capital gain. There is no capital gain income, so it has to be what forward? Hence carry forward to the future year. Hence automatically the capital gain will become dash. Am I right? Coming to IFOS, man, the last income, whatever you eliminated from the PGBP should be included in IFOS, which is nothing but rent from furniture, 1 lakh, and that's it. We have finalized the gross total income comes to 10,49,300. Sir, for this PGBP, two option, either presumptive taxation option or normal provision. We travel through the normal provision. Now, for the whole the head, sir, are you going through optional tax regime or default tax regime? There is no question of chapter 6A at all. So the total income will be 10,49,300. For that 10,49,300, we have to calculate the tax payable. In that, there is no special income at all. Am I right? Sir, I am going to travel through the default tax regime up to 3 lakh rupees nil. Next 4 lakh, 3 lakh to 7 lakh at the rate of 5% comes to 20,000. Next 3 lakh, 7 lakh to 10 lakh at the rate of 10% comes to 10 lakh to 12 lakhs is the next slab, but we are having only 10 lakh 49,300. So for that 49,300, 15%, 7395. So the total to total will be 57,395. There is no headache of the surcharge and all. Add health and education cess of tax payable will be 59,691, will be round off to 59,690. Option number 1. If you calculate PGBP using normal provision, and if you calculate the ultimate tax payable under the default tax regime, this will be the tax payable. No. I'm moving into the second part. Sir, for the PGBP, I am going to use the presumptive taxation route. And for the ultimate route, I'm not going to travel through the default tax regime. I'm going to travel through the optional tax regime. Can I? Income from house property will change, will not change. Income from house property will not change. The same 1,21,100 only. You want once again income from house property computation? No, the same. Am I right? Because from income from house property, we are having only let out property. Am I right? Let out property are same in both default tax regime and the optional tax regime. The next one, the hero, PGBP. Yes, that's the hero. What is your gross receipts, my dear lovable students? 70,80,000. Question specifically said that all the receipts are account pay check or through account pay bank draft. So on that 7,80,000, you are liable to pay tax at the rate of 6%. So 70,80,000 into 6% comes to 4,24,800. Am I right? That's it. PGBP comes to an end. So we calculated the PGBP using the presumptive taxation route. Am I right? IFOS will change, will not change. Will not change. Same 1,20,000. Gross total income will be 6,65,900. Now, since you are going to travel through the optional tax regime, you are entitled to claim Chapter 6A deduction. What and all Chapter 6A? Sir, PPF you are entitled to get 80C. Life insurance premium you are entitled to get 80C. Subtotal 1,10,000, which is less than 1,50,000. You can allow 80G National Children Fund. Sir, children, sir, take care of that children. No qualifying limit. 100% can be deduction under 80G. Interest on loan for higher education of his wife. Sir, you can, interest can be claimed as deduction under 80E. So the total deduction will be 2,05,000. That means if the assessee is going to travel through the presumptive route for PGBP and optional tax regime for the ultimate computation, 4,60,900. Have we calculate the tax payable? On this 4,60,900, no special income and all. What is the age of the assessee? 55. Normal. 2,50,000 is the basic exemption limit. Am I right? So 4,60,900 minus 2,50,000 comes to 2,10,100. On that 5% tax payable, 10,545. Is the assessee's total income exceeds 5 lakh? No, sir. Assessee is entitled to claim a rebate under 87A, and there is no income covered under 112A. Then either 12,500 or the amount of tax payable, whichever is lower, can be claimed as deduction. Tax payable will be nil. Very comfortable. So better to choose presumptive taxation under 44AD and choose optional tax regime. Are you all really with me? Now the third one, sir. Total income and tax payable by Pramod as per the normal provisions of the act. That means I am not going to travel through the presumptive taxation route. I am going to travel through the books of accounts route. Am I right? Plus, sir, I'm not opting for section 115 BAC. That means I'm going to travel through the optional tax regime. Already books of accounts be done. That means simple. What is the gross total income? Gross total income computed in above. Go back and tell me. 10,49,300. This is, sir, as per normal books of account system. Am I right? You should pick the figure here. 10,49,300. Are you able to match it? Less chapter 6A deduction, because now I am going to travel through the optional tax regime. We already finalized chapter 6A just before case. What is the chapter 6A? 2,05,000. So my total income will be 8,44,300. On that, I'm going to calculate the tax payable. Now I'm going to travel through the what tax regime? Sir, up to 2.5 lakhs nil, 2.5 lakhs to 5 lakh at 5%, 12,500. Am I right? Actually, remaining, sir, 3,44,300 is there, which will be taxable at 20%. Am I right? Subtotal, since the total income does not exceed 50 lakhs and all, there is no headache of charging. On that, just charge health and education cess at the rate of 4%. Total tax payable, you will get 84,610. This is like a suicide route. There is one option where there is no need to pay tax at all, but here you are liable to pay 84,610. So out of the three available, it is beneficial for Pramod to opt for presumptive provisions under 4480. Calculating PGBP, please calculate the PGBP using 4480 and not opt for 115 BAC. Sir, since you are having chapter 6A deduction, better not to opt the default tax regime. Please travel through the, so for PGBP, better to calculate presumptive route, and for total income calculation, better to travel through the, this is the most, sir, beneficial route for the assessee, because the tax payable is nil. What a beautiful, outstanding, fantastic question. Illustration number 6, I have chosen for you, my dear lovable students. We are having pending with only one question, 7th question. Take 3-4 minutes time, mandatory 5 to 7 minutes of time. Mark what are the new learnings you are having. Come back to me. 7th question. That's it. 7 nale special da. Right. Yes, sir. Sir, in our journey of solving 7 question, we are into the last question, man. Once we done this, we can say that 7 by 7 has been done. This is the last question. This is the last question. Beautiful question, man. Fantastic question. Mr. Sahil, resident Indian, aged 40 years. A manufacturer at Chennai gives the following manufacturing, trading and P&L account for the year under 31/3/2025. These are the manufacturing, trading, P&L account for the year under 31/3. Sales is there 43,50,000, which is less than 2 crores. So there is a scope for presumptive taxation, even though nothing has been asked in the question. Closing stock 2 lakh. Opening stock given, purchase of raw material, manufacturing wages and expense, gross profit, normal item only, gross profit. From here only, impurities, dividend from domestic company. Sir, dividend should be taxable under IFOS, should be deduct from PGBP, include under IFOS. Winning from lottery, 10,500. Net of TDS, remove 10,500 from PGBP, include 15,000 in IFOS. By profit on sale of share, deduct from PGBP 45,000, include under capital gain 45,000. Administration charge, no problem. To GST penalty paid, penalty are not compensatory in nature, they themselves given, should be added back. It's an infraction of law. GST paid allowed, general expense generally allowed, miscellaneous expense generally allowed. Loss on sale of share is a capital gain item. It's an impurity for PGBP, should be back. Interest to bank on machinery term loan generally allowed, depreciation generally allowed. We have to start with a net profit. Following are the further information. If this further information itself is not there, life would have been so easy. Come on. This is a past examination May 24 question, man. Look at, there are 10 to 12 further information items are there. Administrative charges include 46,000. That means inside the administrative charges, 2,90,000. This include 46,000. Paid as commission to brother of the assessee. Is brother related party? Commission amount at the market rate is, so 46,000 minus 36,000, 10,000 should be back, added back. That's it. as per 40A subsection 2 related party transaction. Out of 15 mark, 1 mark will be there for adding back 10,000. Super, sir. Assessee paid 33,000 in cash to transport carrier on 26/12. This amount is included in manufacturing expense. Assume that the provision relating to TDS are not applicable on this payment. My dear lovable students, for 40A subsection 3, cash payment for GTA is 35,000. Since this is only 33,000 and there is no TDS implication under 194C, no need of disallowance. That's it. If you are not disallowing by referring to 48.3 and 194C, 1 mark will be in your pocket. A sum of 4,000 per month was paid as salary to a staff throughout the year, and this has not been recorded in the books of accounts. This is the highlight of the question. That means 4,000 into 12 comes to 48,000. 48,000 rupees expense paid but not recorded. That means unexplained expenditure. One expenditure has been incurred. Are you remembering IFOS? Unexplained cash credit, unexplained money, unexplained investment, and unexplained expenditure. That's it. Then provisions of 115BBE will be applicable at the rate of 60% tax rate. Beautiful adjustment. By adding one line, they will destroy so many people's life, because they will not adjust it properly. Tax calculation, surcharge, everything will change because of this one line. Come on, I will show you. Bank term loan interest actually paid up to 31/3 was only 20,000 and balance was paid in October. October means after due date. 43B implication will be applicable. So 20 out of the interest to bank loan 60,000, only 20 has been paid within due date. Remaining 40,000 has been paid after due date. That 40,000 should be in a back. Miscellaneous expense include 10,000 contributed to Prime Minister's Relief Fund. That 10,000 should be added back. You can claim deduction under loss on sale of share represent shares sold within a period of 6 months. That means short-term capital loss from the date of purchase. Profit on sale of share represent shares held for 2 years and security transaction tax was paid on it. That means long-term capital gain covered under 112A. Long-term capital gain can be set off against short-term capital loss, but both has to be added back in PGBP area. Housing loan principal repayment during the year was 50,000. That principal repayment you can claim it under 80C, and it relates to residential property occupied by him. Okay, fine. Interest on housing loan was 2,60,000. Total interest they are talking. Housing loan was taken from Canara Bank. Value of the house property is 45 lakh. Loan value is 25 lakh. Sanction date is 31/3/2017. That means, sir, loan has been sanctioned in 16/17. Sorry. Sir, once the loan has been sanctioned in 16/17, sir, 80EE Chapter 6A will be allowed. Out of 2,60,000, 2 lakh can be claimed as deduction under 24B. Remaining 60,000 is there. That will be restricted to 50,000. These amounts were not dealt in the P&L account given above, assuming this housing loan is eligible for 80E deduction. Examiner, they themselves saying that it is entitled for 80E. Are you all really with me? Depreciation allowable under this act to be computed on the basis of following information. Plant and machinery depreciation rate 15%. Opening WDV 12 lakh. So on that 12 lakh we have to claim 15%. Addition during the year used for more than 180 days 2 lakh. So for the entire 14 lakh we can claim 15%. Total addition is 4 lakh. Oh my god. So out of 4 lakh, 2 lakh is more than 180 days. Remaining 2 lakhs are less than 180 days. For this less than 180 days, only half the rate of depreciation. Am I right? Ignore additional depreciation, they said. Ignore it. Leave it. Compute the total income and tax liability of Sahil for assessment year 25-26 if he has excised the option of shifting out of the default tax regime provided under 115 BAC. Excise the option of shifting out of. If he excised the option of shifting out of default tax regime, that means in what route he is going to travel. Optional tax regime. Come on, man. Simple, man. Is there any salary detail? But there is income from house property detail is there. That house property is a self-occupied property. Am I right? So this is the house property detail. Sir, GA will be nil. Less LT bar MT will not be taken into account. NAV will be automatically nil. Sir, on that NAV, less deduction under 24B. Out of 2,60,000 under 24B, Since all the three conditions has been satisfied, loan has been taken on or after 1/4/1999. Loan amount has been used for the purpose of construction or acquisition. Such construction or acquisition has been completed within a period of 5 years from the end of the financial year in which the loan has been sanctioned. My dear lovable students, you are entitled to higher limit of 2 lakh. So loss from house property is 2 lakh. That's what here. Income from house property 2 lakh. Are you all really with me? Sir, dashboard, sir. They would have done set off and carry forward. Wait. Because for loss from house property, interhead adjustment is possible up to an amount of 2 lakh. Let me check with PGBP. Sometimes that would have been happen. PGBP, we have to start with the what profit? Net profit. Add expense debited to P&L, but not allowable as deduction, or to be considered under other head. Commission paid to brother as per 40A subsection 2 related party transaction. That excess amount should be added back. Am I right? Cash payment to transport carrier, no problem, because in a single day to a GTA, you can pay up to 35,000. Am I right? Interest on loan, interest on bank to term loan, total 60,000 was there. Out of that, 20,000 only paid within due date. Remaining 40,000 has been paid beyond due date. So that 40,000 should be added back in the current year as per 43B and will be allowed as a reduction in the next year. Am I right? Contribution to Prime Minister's Relief Fund, that's a donation. It's not a business expenditure. First of all, it should be NABAC and it can be claimed as a Chapter 6A reduction under 80G. SGST penalty paid, it's not, it is an infraction of law. It's not compensatory in nature. It should be NABAC. Loss on sale of share. First of all, this is a impurity for the PGBP because it's a capital gain head. So that 20,000 should be added back. Depreciation as per books, my dear lovable students, that would have been provided as per SLM basis. But the correct depreciation calculation details has been given. We will be calculating and will be reducing the depreciation. You will end up with subtotal. Less income credited to P&L but not taxed as business income. Dividend income should be taxed under IFOS. Winning from lottery should be taxed under IFOS. Profit on sale of shares should be taxed under capital gain. So these are pakka pure impurities for PGBP, should be removed from those and should be taxed in the respective head. Less depreciation allowable as per the income tax rules on plant and machinery. My dear lovable students, totally how much was there? Plant and machinery, starting value and all, 12 lakhs plus addition 4 lakh. In that 2 lakhs is more than 180 days. So 14 lakhs is the target. So 14 lakhs into 15% and 2 lakhs into 7.5%. Am I right? So 14 lakh into 15%, 2 lakh 10,000. 2 lakhs into 7.5%, 15,000. So 2 lakh 10 plus 15,000 comes to 2 lakh. That's what 2 lakh 25,000 they have reduced. Sir, in addition to, you will be getting the business income of 13 lakh 47,500. Let's set off of loss from house property. Are you all really with me? Because loss from house property can be set off against any head of income up to an amount of. That's why the answer here is nil. Am I right? Because PGBP set off we have done. So you will be getting subtotal of 11 lakh 47,500. And here the game starts. Salary paid to staff not recorded in the books. It's an unexplained expenditure. 48,000 should be added in PGBP. So the profits and gains of business or profession comes to 11,95,500. These note are very easy. Commission paid to related person relative to the extent it is excessive market rate is disallowed under 48.2. That is the reason why that extra 10,000 has been added back. Following 48.3, GTA not disallowed because in a single day the one-time cash payment limit is 35,000. Interest paid to bank after due date of filing return under 139.1 is disallowed as per section 43B. Sir, here not allowable since the same is not incurred wholly and exclusively for business purpose. That's why note number 4 we have added back. SGST penalty is not compensatory in nature. Therefore, it is not allowable. We have calculated the depreciation. No problem at all. We also got the right answer for the depreciation. Capital gain, my dear lovable, that's it. That's it with regard to the PGBP. 11,95,500 is the PGBP. Can I come to the capital gain? We are having short-term capital gain and short-term capital loss. Long-term capital gain and short-term capital loss. Long-term capital gain taxable under 111A. Since the shares are held for 2 years and SCT has been paid, 45,000 will be taxable under 111A, sorry, 112A. And set off of short-term capital loss 20,000 because short-term capital loss can be set off either against short-term capital gain or against So the taxable capital gain will be 25,000. No need to pay any tax because under 112A up to 1,25,000 is exempted. No, only 25,000 is there. When you are calculating tax payable, leave it. That's it, capital gain done. Coming to IFOS, we have removed dividend from domestic company 15,000 from the GBP. Winning from lottery, we have to show gross 15,000. Am I right? So the IFOS will be 30,000. That's what they are showing here. Capital gain 25,000. This capital gain is 112A. Don't forget. IFOS is 30,000. So the gross total income is 12,50,500. What route? Optional tax regime. You are entitled to claim Chapter 6A deduction. What are the deduction? Chapter 6A deduction allowable. ATC. Principal repayment of housing loan. 50,000 you can claim. Am I right? Because under 80C, principal repayment 50,000 is allowed. Correct. This is principal, not interest. Deduction under 80E interest. Sir, actually out of 2,60,000, we already claimed 2 lakh under IFHP. Remaining 60 is there, but under 80EE, only how much is allowed? 50,000 is allowed. Are you all ready with me? Deduction under 80G, Prime Minister's Relief Fund, 100% deduction, 10,000. So the total deduction would be 1,10,000. So from the gross total income of 12,50,500, if you remove 1,10,000, the total income will be 11,40,500. The real game starts here in computing the tax payable. That's the beauty of the question. Computation of the tax payable. On long-term capital gain, since it is only 25,000, under 112A, it is exempt up to 1,25,000. So fully exempted. Am I right? Winning from lottery, 30% is the tax rate. So 15,000 into 30% is what? 4,500. This amount only they have deducted as TDS. So after calculating the what payable? Tax payable, you can reduce it the TDS if you want the net tax liability. This we have calculated the gross tax liability, nothing. Okay. Unexplained expenditure was there. How much rupees? 48,000. That will be taxable at 60%. Right? That's 68, 69A, 69B, 69C, 69D. Everything was taxable at how much percent? 60%. That's what? 48,000 into 60%, 28,000. So from the total income, if you remove 112A, if you remove winning from lottery, if you remove unexplained expenditure, you will be getting the balance 10,52,500. This will be taxed at slab rate. He is going to travel through the optional tax regime up to 2.5 lakhs nil, 2.5 lakhs to 5 lakh at the rate of 5%, 5 lakh to 10 lakh at the rate of 1 lakh. Basically in excess of 10 lakh will be taxable at 30%. So the subtotal will be 1,61,500. Here the real drama starts. The total income is only, sir, less than 50 lakh. But total income include unexplained expenditure, which will attract surcharge at 25%. Everyone will forgo to add this surcharge. Sir, on this 28,800 rupees for the special income, undisclosed income, you are liable to pay surcharge at the rate of 25%. So the total will be 1,68,750. On that, add health and education of 4%. Tax liability will be 1,75,500. Comfortable? 50% of the answer comes to an end. Because the same question can be solved through presumptive taxation also. Till now we were talking about what? Normal route. So 8% of the sales, which is 43,50,000 into 8%, 3,48,000, assuming entire amount of sales are not received by account pay check, account pay bank draft, electronic clearing system, such as electronic mode prescribed. If it is assumed that sales are received by account pay check or account pay draft or electronic clearing system or such as electronic prescribed mode on or before due date of filing return, presumptive rate would be how much percent? Fully cash 8%, fully account 6%. As per 44 AD, in case Mr. Sahil being an eligible assessee, sum equal to how much? 3,48,000, which is 8% of the total turnover, or as the case may be, such a higher sum, aforesaid sum claimed to have been earned by him would be deemed to be the what income. In this case, since Mr. Sahil has maintained what's of accounts, he can claim higher sum actually earned is 13,47,500 as his income from business. Actually, if you are traveling through the presumptive taxation route, only 3,48,000 is the business income. But since you are maintained books of accounts, even you can declare 13,47,500 also as your business income, assuming contribution is made otherwise than by what? Cash. So alternatively, Mr. Sahil claim his business income of 3,48,000 also, which is only 3% of the total turnover, and the tax liability would undergo what? Surely a change, because if we calculate PGBP as per presumptive taxation route, that much income will not be there. Am I right? If it is assumed that entire sales are received by account pay check or account pay bank draft or electronic clearance system or such an electronic mode as may be, then the presumptive rate will be 6% even as calculated on 8%. This note number 1, are you able to appreciate? Note number 2, sir, assuming the expenditure is in the nature of unexplained expenditure, it is only an assumption. Same is deemed to be an income as per 69C of Mr. Sahil. No deduction will be allowed in respect of such income. Pakka? Alternatively, it is possible to assume that salary not recorded in the books of accounts was a erroneous omission, and assessee has offered satisfactory explanation about the source of such expenditure. There is only an assumption. We have assumed that it is an unexplained expenditure. That's why 69C has been applicable. In case, if you are assuming that, no, assessee has pakka given an explanation to the assessing officer, in such a case, it would not be considered as what income. And same would not be allowed as a deduction while computing income. Sir, on the basis of books of accounts, nothing, man. If you are feeling that, sir, that amount is not an unexplained expenditure, sir, it's a explained expenditure, means I will not add back. I will reduce it. Because that amount should have been debited to P&L account. They missed to debit the P&L account. Because of that, net profit is higher. Are you getting the logic? In such a case, business income, total income, tax liability would be reworked, and they have shown like this, man, because automatically the gross total income will come down, total income come down, tax liability come down, everything will come down. Why in answer we have shown it as an unexplained expenditure? Then only I can special slab rate of 60% can apply. Then only I can apply special surcharge of 25% can be applied. For that only we have separately shown, and alternatively we are writing a note. What a beautiful, fantastic, outstanding 7 questions we have solved, my dear lovable students. Anyone who are struggling with computation of total income and tax payable, this will be a great gift. 56 subsection to class 10 from my side. But many students will listen and go to exam. I recommend you to do one time this 7 question. Either one stretch all the 7, practically impossible. At least 1 question per day. Still we are having time to approach the examination, and 7 days we are having. Even for the tax itself, out of the first 15 questions, if you are able to get 12 plus marks, that's it. We can ensure or assume an exemption in tax. That is very much possible. I hope that this session was very, very useful for you. If yes, ensure, sir, comment in the comment section. I'm waiting for you, my dear lovable students. We'll meet at the appropriate time for another valuable video. Thank you. Bye-bye from ANM.